Hope everybody had an amazing weekend, did something fun, high-fived somebody for no reason at all. Who knows? Guys, as we come into the morning, I'm going to check news, see what's going on, and you'll notice those big red boxes. Right at 9:45 a.m., we have Flash Manufacturing PMI and we have Flash Services PMI. Both of these are high impact potential, which means that the market could spike, it could bounce, it could jump, it could reverse, or it could simply just be too fast to trade. We know about these long before they ever happen, and what it does is it gives us the opportunity to stay out of the way. Can you guys hear me okay? Just want to make sure. We've had some Discord challenges lately. Can you guys give me a Y if you can hear me? All right, thank you for that. I always panic when nobody says anything right off the get-go. So guys, 9:45, set an alarm. I'll keep an eye on the clock, but you too. Good afternoon, Miss Jen. Nice to see you. In the spirit of what we did Friday, and guys, what we're going to do moving forward, the 101, that hour that we spend going through those three basic rules for the high probability trend trade will no longer be a thing. If you need the rules, if you need the high probability trend trade rules, guys, there's the video right there. The video has been the same for the last 3 years for the first hour of every class. I think what we decided on Friday was that you guys are going to get more out of watching a live market. You're going to get more asking questions, seeing things, hearing the feedback on what the indicators say. And then we're going to do that, guys. The goal is going to be that you can read your indicators. Because indicator reading, looking at your charts, looking for advantages, guys, it's 90% of your day, each and every day. There's a whole lot of doing nothing when you're playing day trader. So when we look at charts today, I'm going to go back to three concepts. I'm going to go back to the idea of momentum. I'm going to go back to the idea of a clear path. We're going to do a lot of where are my triggers. And then we'll talk about entries as well. I'm going to focus more on a high probability trend trade. I'm going to focus more on a 50-50 trade that is the best of the best. And when there's other opportunities, guys, we'll see them, we'll circle them, we'll talk about them. But I want you to remember that this classroom becomes amazing and this classroom becomes informative when you guys talk about what it is that you see. So I'm going to cover those three concepts that I'm going to be focused on all day. And the first one is momentum. So what I'm going to do for you here is I'm going to lose everything but my trigger lines. And what I want you to see is that momentum is a definite look. Momentum is a 100% either is or is not kind of scenario for the new user. And then for the more experienced users, you begin to grow, there's opportunities that fall outside of the best of the best. So I'm going to take this picture. When I talk about momentum, guys, I'm talking about trigger lines. I'm talking about small triggers. These are the two solid lines that work together. They're a fast-moving indicator. You can see them on both charts. And we're talking about large triggers. These are the dashed lines. They're a slower-moving indicator. There's a relationship between the small and large triggers that defines momentum in the market. And what it is from the point of separation, when the background is red, means that the trend is down. And when the trend is down, there's a point of separation between those two triggers. They open and they close like scissors. In between those two arrows is strong triggers. So separation means strength, guys. When I have that gap between the two, the odds are favorable for the market to continue down. This is the first advantage, and this is rule number one for the high probability trend trade, making sure that you have strong trigger lines. So down here, we get the separation, and then it closes. So in between the separation and close, this is where the highest probability trend trades can be taken. This is the absolute best of the best. And what you're going to find is that when one line goes inside of the triggers, guys, it's still momentum, but it's not the best momentum. And when zero lines are outside, when the small triggers work their way inside of the large triggers, what you end up with is what we call weakness. And weakness creates problems in the market, guys. Weakness is where the market tends to retrace from the middle of nowhere. Weakness is very often an indication that key areas may hold. Um, so as we recalculate here, you're going to see weakness at a fib or at yellow one-to-ones and a big retracement. And you're going to see not really separation, the larger flat, the smaller up, right at key one-to-ones. There's your retracement, and then eventually down it goes. Weakness at the bottom, that's where it starts up. Weakness in the move right now, and sure enough, you can see that bar coming down. So we're going to use the idea of momentum. We're going to couple it with what we call a clear path. This is rule number 2. And that clear path is nothing more than a comparison of trigger lines, guys. How many trigger lines have made it through the area? So in the S&P, we are not actually at an area. But when we get on crude oil here, you can see 74.08, key Fibonacci resistance. Your small triggers have made it above, but your large triggers have not, guys. And that means this is an area that may stop the market, that may create a bounce, that may take away forward progress. When we're looking for the market to break through these key areas, we're looking for those strong triggers. So the two are going to come together. The easiest trades that you'll ever take will be taken to Fibonacci resistance, not directly into Fibonacci resistance. It'll be taken on the way down to get to Fibonacci support, not trading directly into Fibonacci support. So we're going to look for opportunities in the market when we have strong triggers and when the market hasn't reached the area. And the way you're going to do that, guys, is by taking a pullback to an area inside of triggers. And this is one of those amazing examples where it pulls right back to an area inside of triggers, and it tries to go up and it fails, and then it continues. And we had a great lesson on confirmation bars over the weekend. I dropped it in this room if you're interested. Maybe we'll go back and revisit it. But when my large chart has strong triggers, and when my large chart has absolutely nothing in the way, guys, we're going to look for a couple things. We're going to identify where this little pullback can go, somewhere between the trigger lines, and we're going to look for the areas that can create a bounce, and it's the areas within the triggers, guys. And what you're going to find is that when you have strength, when you haven't reached an area, this is a pattern that repeats itself each and every day, guys. This is a pattern. That pullback to areas inside of triggers is actually the entry for the highest probability trend trade. So we're going to focus on that today. We're going to do some chart reads, and I'm just going to say, honestly, the same thing over and over and over. We're going to talk about strength, and we're going to talk about location of the triggers versus the areas, and we're going to look at the charts that you guys posted, and we're going to talk about how you do things. One of the things that I can tell you without hesitation, guys, is today, when you look at the charts posted by users in the room, when you look at the wins, when you look at the losses, every time you look at a chart, I want you to think about these first two advantages. The advantage of momentum through strong triggers and having nothing in the way. And what you're going to find is that there's an awful lot of winners happening with these two advantages. So if you focus on defining momentum and understanding whether or not you have a clear path, what's going to happen is you're going to set yourself up and give yourself a foundation that pays dividends long term. Whew, crude oil, guys. Look at that go. Maybe some unsettled markets with everything. The crude oil market just opened, guys. And look what momentum did. It pushes up, pushes down, up and down, right to a fib. Absolutely no triggers through. So what we're waiting for is either the market to bounce or we're waiting for our triggers to begin getting through the area. And these are kind of our two choices, guys. As long as price reaches Fibonacci support and the triggers remain above, it's a termination. Smalls break through, 3 triggers through, pulls right back to the areas inside of those triggers, and we'll see if it continues down here. Because of the volatility, I'm choosing to not do anything right now. You said huge volume just came in, but guys, this is it. Pull back to the areas inside of triggers with momentum, and we'll see what happens here. But this is kind of the pattern that we're looking for. Strength, at least 3 triggers through. Reversal bar sets it up. The market's moving down. This area has the potential to break. This area has not broken yet, which means if a divergence prints, we might want to take an exit. I'll put my stop 2 ticks above a reversal bar. So if this divergence becomes true, I have reaction time. If it never becomes true, no big deal. There it is. It's true. We can take an exit. We can tighten up, see what happens. I would just close the position because the divergence were true. And that is 1, 2, 3 divergences in the same price range. 10,000 contracts came in, Pete. That's amazing. That was pretty flooded. But guys, this is what we're going to do all day long. So as we start, I want you guys to tell me, do you see the momentum? And this is our first lesson, guys. Odds favorable momentum. Odds favorable momentum. It's a separation between the small and large. It's that gap between the two. This is what pushes a market. Once you have it, we're going to make sure that it has not reached an area. And if it hasn't, we're going to look for those pullbacks to areas inside of favorable large triggers. And sure enough, my exit condition got me out of a trade with profits rather than losses. Pretty cool, right? One of the misconceptions about trading is that every trade has to be a winner. Every trade has to go the different distance. Every trade has to produce these astronomical results. When you get to the point to where you can read your indicators a little bit, guys, even the trades that fail, you're going to find produce opportunity. That's one of my favorite things about what we do here. So I'm going to click on a couple charts, guys. We're going to spend the whole day feedback and live market, feedback and live market. So ask a million questions, guys. We have a live moving market to help out with this. And remember, you're going to see trades that are taken differently than what you're accustomed to. You're going to see trades maybe that don't fit these 3 rules. That's okay. Everybody's in a different spot. Share a story. When I started with the software, my brother ran the room, and I would watch you guys make money all day long. And I hadn't figured out my way to make it yet. Frustrated the ever-loving snot out of me. So if you see people doing something that you're not doing yet, guys, it's okay. Take notes if you need to, but focus on your avenue. Focus on your trading plan. And usually what the new users are focused on in the beginning is this one right here, what we call the KISS plan, and I'll drop it in the room for you. And the KISS plan is kind of the best of the best, guys. It's that high probability trend trade. It's that trade where everything is perfect on every chart, where you have strong triggers, you're not trading in a lines, and you define an entry. This trade opens the door for a 50-50 trade when those areas have the potential to break. And that's exactly what we just did live in the market. It only had the potential to break because the triggers weren't through, which meant that we managed it assertively. And then from there, you guys start to find more. Start to find more ways to do things. So Joel drops in, and Joel's using a high probability trend trade checklist, which is awesome. And he has a termination condition. He has one of those instances where price reaches an area and the triggers don't get through, and the reaction is a full reversal. We call this a strong bottom. And he says, well, I've got momentum. It's not that strong trigger look. It's that tail end of momentum. And then, Joel, you say you get that entry at the area inside of triggers. And I'm just going to give a little lesson here, guys. As you look for entries, the rules say you're going to buy a pullback to an area inside of triggers. One of the things that happens is if your pullback dissects the area, that area is kind of out of the equation. If we're looking for this area to create a bounce, the fact that a price bar closes on the wrong side of it kind of says, hey, it may not be creating that bounce. So Joel, what you got into was kind of a momentum look, but because of the momentum, because of the clear path, it still works out great. It doesn't get outside of that retracement zone, and you take it right up to the key areas. What a great way to get targets. You have momentum. There's nothing in the way. The market pulls back to the mid band, and sure enough, you ride it up all the way to the fib. Joel, nice trading this morning. Well done. So we're going to do a couple, then we're going to look at the live market read. Small triggers break through the area. Large triggers do not. Guys, this area only had the potential. It only had the potential to break. And it didn't. And how did one of the great indications that it probably wasn't going to happen were these three divergences in the same price range. Guys, three divergences in the same price range can stop a market the exact same way that a Fibonacci area can. So if you took the trade, you had an awesome opportunity to manage out of that trade when divergence prints. Momentum and path, ladies and gentlemen. We're going to talk about that a lot today. And just a heads up, the whole reading the market live and making that the only course, guys, it's a transition for me. So if I feel a little fish out of watery, work with me. We're just going to go back and we're going to read. 2 weak bottoms, meaning just that the market didn't turn from a termination condition. And this is pretty awesome patience. Pete gets momentum, but he gets into the 73.97 area, these yellow 1-to-1s. And when he gets there, look at that. There's those three divergences. And Pete says, man, I don't think I want to trade directly into something that could stop the market. My triggers aren't through. The momentum is there, but I'm just not sure. And then when all of his indicators roll and everything starts to head up, Pete says, okay, now I can go and try to capitalize on that look. And sure enough, he does. Pete, great patience. Not getting caught in the reaction off the key area, waiting to get above it, and then finding a way to make your money. Really nicely done there. And then same thing. Everything says down, and Pete just can't seem to get a good look at an entry. So he says, all right, I'll get through the shenanigans, and I'm going to jump in when I've got momentum on both charts and everything looks good. And Pete says, man, I should have waited to get below the line. I don't disagree. Because look what the line did. It creates this big ugly bounce. And then once you get below it, it is smooth sailing to get to the fib. Pete, another great trade. Little early on the entry, but with that level of momentum, it works out. And guys, odds favorable momentum and absolutely nothing in the way. And then Pete, here's the bonus read. And guys, this is one of the reasons why we post in the room. Pete says this is a weak bottom. And Pete, I disagree. This is a mid band with the large triggers a full bar away, guys. That makes this mid band a termination condition. And when it reverses the market, Pete, it is all strong bottom, which just creates an advantage to go the other way. And look at this chart. Nothing but momentum. Nothing but momentum. And Pete rides that momentum all the way up to the key Fibonacci area. And right at that key Fibonacci area with weak triggers, he says, you know what? I'm going to exit. I'm going to exit. That's all right. Pete, this is probably the biggest, most common mistake on the strong top or bottoms is when the mid band is behaving as a termination. Because we think of fibs and we think of 1-to-1s and we think of even divergences. And that mid band, sometimes it's hard to remember. Great trading though. So guys, there's that strong trigger look, that odds favorable momentum. Absolutely nothing in the way. And Pete just rides it. Just rides it all the way up. Really well done, Pete. Guys, that's a trade that is dependent 100% on the first two advantages. I encourage you guys. I don't tell you to because I don't tell you how to trade. I refuse to tell you how to trade. I help you read indicators. But one of the things that I will tell you is that you're going to notice an awful lot of winners in this room that are using momentum and path. And when the two are present, it's almost like the market sings its song to you and tells you, hey, this is what's going on. Let's find a way to capitalize. All right, Jen. By definition, not a strong top. That's true. And by definition, not a strong bottom because the large triggers were more than or less than a full bar away. So what you have here is kind of a little indecision. You've got two key areas, neither one willing to break. So you wait for the momentum on the small chart, don't have it on the large chart, and you ride that momentum. And Jen, I don't know if you read the pictures that I posted regarding management. So one of the things about the momentum trades, when you have it on both charts, it's easier. You're riding the small chart momentum coming off of the failed 50-50. But one of the things is those yellow 1-to-1s. When you reach them, and you even said you were looking to retest 38. When you reach them, these triggers give absolutely no indication that the market wants to finish that move. It's okay to get paid when you hit that area, instead of waiting for the momentum to go away. And one of the things that we talk about a lot is reasons to exit a trade. Either at profit targets and key areas that can stop the market, fit that bill 100%, or when the advantages have gone. So just because you're in the momentum trade doesn't mean you have to wait for momentum to go away if you hit that big ugly termination. Great trade, Jen. And here we go again. Momentum, room to the area, ride the momentum to the area. Absolutely beautiful. This one, I will agree, is a momentum trade because there's momentum on both charts. That's a solid look. Same thing, odds favorable momentum. You have the potential to break this area. Have a wonderful day. Small triggers are through. Large triggers are not. This fib has all the potential in the world to break that area. So Jen says, you know what? Let me get away from that area that's problematic. I've got momentum on both charts. Once again, she gets paid because it's only momentum. And then out with the loss of momentum. Jen, like a rock star. And we do it again. So Jen, does the not a strong top play into the trade for you? I'm just curious because that was not a strong top at 5:21 a.m. So you're saying because it's not a strong top, the mid-band's a likely place for a bounce, and very often we see continuation. That's the pattern that you're recognizing? I just want to make sure because it's great. Like it. So mid-band holds, and it is a termination. You do have momentum. And Jen, you just get above trouble and ride the momentum up. Absolutely beautiful. Momentum, nothing in the way. Find a way. You guys are really taking advantage of that one today. And then we saw this one. Nicely done, Miss Jen. And then one more. Odds favorable momentum, nothing in the way. And you just jump in. And then Jen, this is a great example of when that reversal bar is an awesome opportunity for management. When you have strong triggers on two charts going into an area, we rely on momentum to break things, right? So if you have momentum on both charts, guys, this is where on that last contract, you give it a chance. You're like, okay, with this much momentum, this area has the potential to break. I'm going to let that last contract try to run. I'll protect myself. And then when it hits the divergence high and all the triggers are so far below it, you get paid. Beautiful management. Were you able to see the difference between that one and that one? That's what I really wanted to make sure that you got out of it. In the moment, that one's more likely to hold. That one's going to have the potential to break. It just creates an opportunity. Like runners are a great way to add to profits, but you've got to have a reason for the runner. Market's not open yet, so we're going to go through all these charts, guys. Weak top, odds favorable momentum, and then Pete, it's a termination condition, right? So just if we go through the textbook, no worries, Jen, I like to help. All the triggers are above Fibonacci support, and Pete is forced to make a decision. Do I take the trend trade? He says, nope, I'm going to let the market get below that fib. And then he gets out of trouble, gets out with a loss of momentum. And then when the momentum continues, he gets back in, gets out with loss of momentum. Nice job. And this is pretty awesome. This is Pete saying, I don't have to trade into a fib. I don't have to trade into a fib to make money. I can let the market get below these trouble spots, and then I'll look for an opportunity with all that momentum. And that's the exact same picture, I believe. Is it not? Nope. Yep. It's the exact same look, just a little lower. All that momentum, and there's your trend trade, and you get paid, and you get out, and then you get back in, and you get paid. Guys, this run right here looks exactly like that run right there. Doing the same thing over and over, taking the advantages and learning how to capitalize. So what do we have going on over here? Well, we missed this read, but there is your strong triggers. There's your pullback to the area inside of triggers, and the market continued right down to the next line. Wish we'd been in this one live. Anybody catch that one? No divergence, strength on both, all the bouncy stuff. Good stuff. In sim, you caught it. Nicely done. And Pete, I want you to avoid the urge to show all the crazy sim stuff that you do. You lied. Took one more trade in the girlfriend's Apex account. Large chart, odds favorable momentum, 3 triggers through trouble. You just jump in, and when you just jump in, it turns into the trend trade. So, Pete, I got to get you on stop placement here. You put your stop at an area inside of triggers with odds favorable and the potential to break. Your stop is right where your entry belonged, and then you jump back in and you make a little money, and then you jump back in and you make a little money, and you hold that last one all the way down until it gives you a reason to exit. ATM, you forgot to move it. Right on. Nice trade. And then everything says down, and we're in what we call a strong trending market, guys. If you see a market 30 bars in the same direction, no reversal bars, one of the things that you can do is you can say to yourself, okay, this market has not produced a reversal bar in over 30 bars. It's broken Fibonacci areas. I can say momentum is assumed. I can say in a market that is showing this, that isn't pausing for anything, I'm going to say I have strong triggers, guys. And that's one of the things you can do in a market that's railing like this. And then Pete has absolutely nothing in the way. So he's got strength in the move down. He's got nothing in the way. And one of the things that you'll see a lot of more experienced traders do is they'll keep selling that mid band until it stops working, because this tends to be the bounce point in strong trending markets. And that's exactly what you did, Pete. And you did it well. Nicely done. That's a good sim trade. How we doing so far this morning, guys? One of the things that we're going to keep doing is we're going to keep talking about momentum. What was the momentum? Jen, you saw the strong trending market as well. Instead of just selling the mid band, you get in on a reversal bar. Had a great conversation about confirmation bars this weekend. When the large chart's perfect, but your small chart isn't quite. Jen says, this area is outside of all my triggers. Let me force it to confirm. And it does. She gets paid, and she gives it back. And Jen, I got to tell you, this is a $130 trade on a 4 lot. Oh, you took 2 off because error in contracts. That was the first 2. That's funny because I did the same thing this morning. I opened up and took a trade on a 5 lot when I thought it was supposed to be a 2 lot. I just didn't look, and I dumped 3 of them quick. I should have held them, though. You're probably having the same feeling that I had. Dag nabbit, I should have held them, because mine did everything it was supposed to do, because I followed my rules. But good job. That's not your plan. So you took them out. Great trade. All right, is that our pictures? Almost. Almost. Try to get through these pictures before the S&P opens up. And guys, remember, there's high impact news at 945. So little base hit, weak bottom, strong triggers, all the terminations, and Pete says, I'm going to trade directly into a termination. Nobody can stop me. And he does. And he makes a tiny little bit of money with a whole lot of stress. Great job. Guys, you'll do things on simulator you wouldn't normally do in a live market. If you're brand new, I'm gonna tell you right now, I'm gonna give you that ominous warning. What you do in simulator will show up in your live trading. What you do in simulator, the rules that you break, the chances you take, the ridiculous stops, the unreasonable holds, they will all show up when you go live. Because you're training your body and your body doesn't know the difference. Now, the second half of that conversation is when you're at a point. When you're at a point where you can follow your plan, where you can take your trades, where you can make your money, and then you switch to sim because it's too early for a tea time. That's what Pete's doing here. Pete's going, I'm on simulator now. I'm going to take some chances. I'm going to make some notes. Who knows? Maybe I stumble into something great, but he has zero risk. It's simulator. It's monopoly money. What Pete's doing is seeing if there's a way outside of the best way, and maybe he'll change his trading plan. All right, Paul. Strong bottom, odds favorable, looks like the potential to break. You get in right at the area inside of triggers. You get a reversal bar in the direction of the trade, and they come and stop you out. And then you're absolutely right. What a great re-entry. The rules are still met 100% here, and you could have gotten back in and taken the trade. And this is one of those times where you have to remember, and the more you realize and the more you understand, and even more so, the more you accept that every great trade won't be a winner, guys, and every bad trade won't be a loser. So you go back to the rules, and Paul, you do it beautifully. Stop behind the reversal bar, absolutely perfect entry, and those yahoos come back for one more bounce, and then they go off. And guys, these are frustrating, but your reaction time will grow as you grow with the software. And what you'll find is that you'll take this little 3-tick hickey, and then suddenly you're back in because the large chart never changed, because those advantages never went away. Nicely done. Alex B. Strong bottom. That's all the momentum. Terminations in the distance. Favorable large triggers, pulls right back to the mid band inside, and you ride it right up to Fibonacci. Nicely done, Alex. One of the things I notice is you don't have your synthetics. Well, you do have your synthetics. That one didn't show for some reason. Beautiful trade. Right back to the mid band. Right in the triggers. And off to the races. Your 8-2 even agreed with it as well. Got some extra charts in there. I like it. And then strong bottom still. Odds favorable, both charts. No trend. Term area inside of favorable large triggers. Still kicked my butt. So let's look at it. Alex, are you with me in here? I love the before and after. This is pre-butt kicking. This is post-butt kicking. So let's go to this chart, the large chart, the first chart. And guys, when we talk about looking at two charts, large chart is going to give you the basis of what you need. The large chart, let me find my picture here real quick. I am missing pictures. There we go. So the large chart is the slower moving chart, and it's going to define the momentum. And it's also going to let you know what you need to know about the areas that are present. Small chart's just an entry chart. So when we look at your large chart, Alex, the small triggers are above this key Fibonacci area. Do you see how far away your large triggers are? You see it in the synthetic as well, way down here. So you could say, okay, I have momentum. This area has the potential to break. But one of the things is you jumped in. Maybe it head faked you. Maybe you thought, oh my gosh, it's going without me at 38. Let me see if we can line up a price. So you're in right here. This is the fib that we're hoping to break. And I think the one thing that's going to help out a lot, guys, when you have the potential to break an area, there's a look. And Alex, John Novak introduced this a week or two into the room. I saved the picture, and I'm going to talk about it a lot. And guys, we're going to talk about it as we look at the market today. How many triggers are past the area? Guys, this is the answer to everything. And I think John's right on this one. If none of the triggers are through, like we see here, the area is likely to hold. That's what we call a termination condition. If only two of the triggers are through, guys, the potential is there, but it's less likely. It's probably not breaking. If three or more triggers, then it's a good looking breakout and probably going to be a more manageable trade. So you see three triggers past here, the market continues. Only two, there's your bounce. No triggers, big bounce. No triggers, mid-band's likely to hold. Off it goes. Only two. And guys, it kind of repeats itself over and over. So what you run into is these large triggers are so far behind. Your slow moving average is so far behind that this area doesn't have a whole lot of chance to break there. And one of the things you can do, especially on a trade that looks like this, is you could say, okay, I still want to give it a try. That's where waiting for one of those reversal bars, a confirmation bar, at least gives you a fighting chance with less risk. But that trigger, the number of triggers through, has really started to pay dividends for a lot of people. No triggers through the divergence high or the divergence low, and sure enough, it bounces. Three triggers get through Fibonacci resistance, and there's a management opportunity. And then three divergences pushes the market down. We've seen that before. And guys, now we're at a point where I've got strong triggers. Three triggers are working their way through. And if we get a retracement before we hit this, we've got areas inside of triggers for a potential entry. Good morning, Trina Boy. Is there a beginner's course or material? Your loss not gonna lie. Yeah, absolutely. So let me give you. For TradingView. Are you working on TradingView, Trina Boy, not NinjaTrader? No worries. So let me give you a couple things, man. The first thing I'll give you, let me drop this in the room. And what you'll find is that what I'm talking about right now on NinjaTrader translates. So I just gave you the indicators. So when you're looking at TradingView, these are the things that you're going to see on there. You're going to see small triggers. These are solid lines. They're a fast moving average. You're going to see large triggers. These are a slower moving average. You're going to use these to define that momentum, that separation, define strength in the market. You're going to see divergence lines. So this is just a roadmap. I dropped it in the chat box for you. Divergence, these magenta lines from a high, cyan lines from a low, they just let you know that the market is losing momentum. And these lines can actually stop the market. Let me make this a little bigger. Zoom, let's make it like 275. So you can use these lines. Right here it says there's a loss of momentum. When the market comes back to them, it can stop the market. You'll use those trigger lines to tell you. One-to-ones are just Fibonacci that print in the moment. So you'll see them as yellow and pink. You can trade from them. You can trade to them, but you don't want to trade directly into them. You'll see the mid band. It's just kind of a moving average in the middle. The outer bands show points of exhaustion. And then if you've got the zones are going to behave as support and resistance, green being support, red being resistance. And they're a great place to recognize where the market may go or areas that could in fact stop the market. So you've got that. And that is for TradingView. And check it out, guys. They ended up breaking down. Some of you caught a momentum trade there. What else can I give you for TradingView? Here is the plan for TradingView written by Nexgen. My brother and I spent a couple months building this one, but it also gives you the workspaces. It tells you how you're going to use each chart, where entries may be taken, and then a checklist for each entry. And then finally, there's a trade journal, Trina Boy. And the trade journal for TradingView is just pictures of those trades, the different trades that are in the trading plan, ideas on management, and when not to trade. So there's a wealth of knowledge there. And then as you practice, start posting in the room. Absolutely. Start posting in the room, because one of the things, and I guess I should have mentioned this earlier, and guys, high impact news in 5 minutes. So learn the rules. That's my job. I'm going to help you guys learn the rules. I'm going to help you understand momentum. I'm going to help you understand when you maybe shouldn't be trading into an area, or when your path is cleared. You've got room to your targets. Simulate practice, guys. There is no loss of capital in a simulator. We're all eager to get to the finish line, but guys, the more reps you put on practice, the easier it becomes. Keep it simple in the beginning. And one of the biggest differences in success that I see with new users is it's not the trades that you take. Like when you take the perfect trade, you'll find that it's a lot easier to win. And I think most of you would agree with me. It's when you take the trades that don't have the advantages. It's when you take the trades where your opinions get in the way, where your emotions get in the way, and it happens to all of us. It's not so much the $500 that I made here. It's the $600 that I gave away breaking my rules, and I end the day down 100. So what you're going to find is that 90% of your day is waiting for things to come together, and 90% of your day is doing nothing. But guys, you'll be able to find ways to capitalize when the advantages are present. And once you get to that point, um, a little bit of entry rules, a little bit of management, and things kind of work their way where they need to be. So there is that huge momentum all the way up to Fibonacci resistance, absolutely no triggers through, and we sit on our hands. Smalls were inside of the large, there wasn't any momentum in the move, and the move goes up. Triggers can't break through support, and there's that big untradeable bounce, guys. Triggers tell the story. There's those weak triggers, giant retracement right back to your mid band. Large triggers don't follow, and sure enough, it closes the gap. So we're going to go over the same thing over and over, guys, and I've gotten through the pictures. And Trina Boy, while we have a minute, here are your trading views. This is the NASDAQ. It hits a zone, and my triggers are below and 2 are above, and there's no long trades, and look how none of the triggers break through support, and that's what gets us back up to that zone. And guys, the NASDAQ is kind of going funky. Nothing to do yet. The S&P kind of mirrors it. As we get to the zones, I've got triggers way down here, and I've got triggers trying to break it, and there's just nothing to do yet. Crude oil, caught in between zones. My triggers are caught in between zones. We're going to take a moment. We're going to pause. We're going to wait for the best of the best. And gold is directly in. All the triggers are way down here. Not looking for any long trades into this area, guys. The easy money is made in between the zones. The easy money comes from being momentum and path. Did anybody take this one? In news in 2 minutes. Did anyone say with all of this momentum and nothing in the way, there's an opportunity to get paid up to the fib? I hope so, because that was perfect, guys. That is the perfect trade. And this is a trade that was developed by a gentleman that has spent time in this room, that learned that high probability trend trade, that understands momentum and path, and he created this dog, or this trade called the chili dog. And the chili dog says, get the back of the bar away from anything that could create a bounce. And as long as you have momentum, back of the bar clears about right here. Find a way, make $110, get the hell out of the market. And it's just a little chunk of a fast moving market. And it's a pretty cool trade. And I think that it came to be because a lot of people don't want to wait for the high probability trend trade. A lot of people get bored. We get antsy. We want to be in the market. That chili dog trade created an opportunity for him to capitalize without waiting for pullbacks to areas inside of triggers. Here comes your high impact news. Look how the market danced in between those two fibs. We're not the only one that knows about them, ladies and gentlemen. Was that the whole news? This is it. We'll see if it spikes and jumps. I can't think of a better example of decisions being made at key areas. That's the buyers and sellers fighting one another in a tight little range. That tight little range happens to be Fibonacci, weak triggers. And I think most of that happened inside of one bar on the large chart. That was pretty cool. Heavyweight price fight, guys. So now what are we doing? We're waiting. We're saying, okay, my triggers are above this area. My triggers are below this area. We have a clearly defined range that we want the market to break out of to look for an opportunity. So where's our opportunity going to start? It's going to start with strong triggers, guys. We're going to do the I'm sitting and I'm just waiting. So we have two options. The market's either going to roll and it's going to give me momentum to the downside, in which case I'll look for a short trade. Or the buyers are going to take over and they're going to push everything above, and I'm going to look for opportunities to the long side. So give me a Y. If you see right now, I don't have momentum on a large chart, and I'm stuck in between fibs on a large chart. Guys, this is your go make a sandwich pattern. This is where you have to sit still for a little bit. And man, that's the hardest thing you'll ever do. So we've gone through all the charts, guys. I've talked about momentum. We've talked about trigger location. So now we're going to play like day traders play. We're going to watch a market and we're going to wait. So I don't have anything to do on the S&P. So I'm going to go over to crude oil and I'm going to say, whoa, that termination reversed the market. It's creating the momentum that I need. And guys, look at this gap in the triggers. Look how far away those large triggers are. Price could pull down and hit these triggers, which means that if I take a shot way up here, gotta be a little more assertive, guys. One of the things you can do, and this was some of the pictures that I put in the room, is when your large chart is perfect. And guys, this is the language when looking for confirmation bars. My large chart has strong triggers and nothing in the way. And guys, that mid band isn't in the way because the large triggers aren't a full bar away. And then the language over here is my small chart entry is not perfect. And it's not perfect because price could return to these large triggers way down here. So if you enter at the mid band up here, your stop is huge. You can say to yourself, if they decide to go from the mid band, I'll wait for a confirmation bar. I'll wait for an up bar. Doesn't guarantee a win, but it gives you some place to put your stop because initial stops are 4 to 5 ticks below the triggers, guys. And that's where the market shouldn't go if this is going to be a winner. The second stop movement is behind a reversal bar in the direction of the trade. So when you're looking for confirmations, if the large chart's perfect, but the small chart isn't, sometimes a confirmation bar becomes a great opportunity. Doesn't guarantee a win, but it at least gives you a place to put your stop. And sure enough, in this case, you would still be in this trade because you still have odds favorable. You've only had 2 divergences. And while you're sitting through some nonsense here, your large chart has not blinked, guys. And this is why advantages come from the large chart. Whoops, that was the wrong drawing tool. Because when this says up with strength, you're going to get a lot of fluctuations over here. Sitting through those large charts. 3 divergences in the same price range, and watch this. This is a termination. This is a trend ender. We'll see if it pushes down and maybe closes the gap. And once it closes the gap, we'll see what their decision is. But 3 divergences says no more shots at longs. Does that make sense, everybody? Large chart looked great. Your small chart just told you pump the brakes. These 3 divergences could push it lower. And guys, this is what I'm doing. Every time I'm looking for trades, I'm sitting here, I don't have an audience. I'm going through this. What does my large chart say? What does my small chart say? Dang it, I don't have a trade. They decided to break. Now we're in a strong trending market, but I need to get above these 1-to-1s. Price reached the yellow 1-to-1s. None of the triggers have made it through. Guys, this isn't my trade. I don't have a clear path. And right now you're like, well, how come he's not taking a trade? Because I can't get my rules met. I can't get my rules met. My rules describe a pattern that I can prove wins more than it loses, guys. And until that pattern comes to be, I'm okay sitting down. I'm okay sitting still. You guys want to go through the confirmation bar lesson that I put together? I think it's a good one. And props to you guys that ask me questions like that. Props to you guys that make me talk through it. Boom, boom, boom. Where'd it go? We'll start with these 2 right here. All right, guys. Large chart has momentum. Large chart has a clear path. And this is exactly what we just looked at. There's a big gap. The stop is huge. There's too much risk, guys. And a lot of you will say that. A lot of you aren't comfortable with 200 plus of risk. So if your small chart has a huge risk range because the triggers are split, if I enter at this mid band, it's like $200 per contract. We just saw that live in crude oil. If I enter on the reversal bar, I can put my stop below it. That's in the KISS plan for stop placement. And it doesn't mean I'll win, but it means that I've lowered my risk by $80 per contract. Notice that it closes the gap back to the large triggers, guys. That's a big piece of it. And here, it didn't quite do it. So we're back to momentum, and we are back to still clear path. We have a mid band, we have 1-to-1s, and then stop belongs down here. So let's try the confirmation bar. Large chart is perfect. This is more risk than I'm looking for. I'm going to force the market to go up before I enter, which means I can put a buy stop right on a reversal bar. And if I get a reversal bar, I'll enter the market from the area inside of triggers. And if I don't get a reversal bar, guess what? I never enter the trade. Does that make sense, everybody? Those of you that are thinking reversal bars, it's important that the large chart rules are met first. If you're looking for a confirmation, if the large chart rules aren't met, the only thing you're confirming is that you're willing to break your rules. So we're still at the mid band. We're still in the retracement zone. We're still alive. Both small and large have gotten above that divergence. It's out of the equation. And now we're just waiting. They either give it to us or they don't. This is exciting, right? And I've got the wrong. All right, I'm still in my retracement zone. Still have a mid band. Still have odds favorable and a clear path. Guys, if we get much further down, I'm losing my advantage and I choose not to take the trade. This is about the end of the road for me. If we start getting below the triggers, I don't want to be a part of it. With momentum and path from the bottom of the triggers, I'm willing to take a shot right at the mid band. My stop will go 2 ticks below this reversal bar that gets me into the market. Are you guys with me? This is live market. Smalls are way above the large, larger up. If we get a reversal bar, we'll run through that KISS plan, guys, and we'll see what it does. If this doesn't become a reversal bar and I start to get down bars, I'll cancel this order because now I'm no longer where I want to be. It's not confirmation anymore. It's just a reversal bar that I'm hoping works out. Not my trade. But you guys see how a little confirmation? You don't have to take the trade. You can force the market to do what you want it to do. And when it doesn't, that's what we say, avoiding avoidable losses. Did that make sense, everybody? That was a pretty good live lesson, I think. Strong trending market. Now we have a clear path. This is where a lot of people will buy the mid band until it doesn't work. We'll see what happens. Can you guys still hear me? For you guys using TradingView, look how we're getting up above the areas, right? Working through. The S&P went smack into an area. Crude oil says down off a mid-band, directly in. And what's kind of cool is crude oil on TradingView. I like it when you can use the two different platforms together. Let's go to crude oil over here. TradingView helped us understand that that one may not be the best trade. I don't think we needed it to stay out of it. But one of the things for you guys that are kind of going back and forth between the two, you're going to see the similarities and you're going to see this overlapping every now and then where the things work out. So where are we at? I've got momentum down. Price reaches Fibonacci support. And guys, none of my triggers are through. Absolutely no clear path. Not looking for an entry, not looking for confirmation. Just simply saying, well, I needed my small triggers through. Now they're there. I do have an area for entry if we choose to take a trade. Only 2 of the 3 triggers are through. Not the greatest advantage. But now it's with trend, it's with momentum. And there's one spot, one line with low risk if the market comes back to it. So now we're just waiting. We're waiting to see what the market does. Whether or not they want us to be a part of this trade is up to the market. It's not up to us. Not a termination that reverses the market. That mid-band is likely to hold. When it reverses, very often, they're looking to get to that fib. We'll see if that's the case. We're going to take a pullback to an area inside of triggers. Our stop will go a couple ticks above the triggers. If they get us, look at them, they're trying. I have momentum, I have momentum, I have an entry, 1, 2, 3, 4. I've got my first target right at the fib that is not broken, and I've got my second target at 200. And guys, now we're powerless. We have momentum, we have the potential to break, we have a clearly defined area. Now we either need a reversal bar in the direction of the trade, or we need to get stopped out. This is a good look. Weak bottom, mid-band holds, creates momentum, potential to break. It's only 2 of the 4 triggers. Pull right back to the area inside of triggers. And guys, we're in a holding pattern. Do you guys understand the reasoning behind looking for an entry? What's going well for me? Momentum, entry. What's the challenge? The area is not broken. So I'm only running on 2 out of 3 advantages here. Which means if it's only 2 out of 3, it's a medium probability trade. Manage it assertively. Don't sit and hope, right? There it goes. There's the example. Only 2 triggers. And there it is again. And guys, don't take trades I take, because I will go outside of the best so that I can show you how the lessons come back and keep you in a position. No confirmation, right? I could have just gone willy-nilly. Only 2 out of the 4 triggers, doesn't work out, and now we're just kind of in that dance. Does that make sense, everybody? Please don't copy my trades. This is an educational room. We're looking for good. Hey, look, there's the mid-band and a strong trending market, and off it goes. We're going to break every egg that we can find in this room, guys. We are going to take the right trades. We're going to take the wrong trades, and then we're going to have a discussion about what went right and what went wrong. And what went wrong on that crude oil trade is exactly what we talked about just a few minutes ago. How many triggers are through? Can you use that as a recipe? Can you use that as a recipe to keep you out of problematic trades? Price reaches Fibonacci resistance. There's your reaction happening right now. I don't have any more long trades because I reached a termination. I can't just arbitrarily buy a mid-band. My path isn't clear. So now we're waiting for the reaction. Is the area going to hold? Is it going to break? No separation of my triggers. I don't have momentum. Absolutely no reason to try to long. Don't have a clear path below. I don't have a short. Guys, 90% of your day is waiting. 90% of your day is waiting. We've had one trade that really fit the rules. This wasn't it. This is an example of what happens when you give up an advantage. All right, I'm going to take a minute, guys. I'm going to go walk a lap. I'm going to breathe. Help me out. What do you want to talk about? What do you want to see? There's your 10 a.m. fib update. What's going to make your life better, guys? Nobody's posting pictures. Oh, that's not true. Sid just posted a picture. Sid, let's see what you did. Hey, that rhymed. Sid says, check it out. Odds favorable, clear path. I'm going to get in above trouble and stay in until resistance. The exact same thing we talked about. Sid did live. Momentum and path. Find a way. Beautiful trade, Sid. Beautiful trade. Would it be easier for you guys if I didn't break rules? Would it be easier for you if I didn't try to make example trades? If we only focused on waiting for the best trades? Let me know. I like taking these trades, guys, because here's what happens. You're going to take these trades as a brand new user, and you're going to post it in the room, and you're going to say things like, damn it, Mark, I got stopped out. And I said, okay, let's go through it. Did I have strong triggers? And you guys are going to say, yeah, I see those strong triggers. I love those strong triggers. And then I'm going to say, did we have a clear path? And you're going to have to say, no, it had potential. And I'm going to say, well, how many triggers made it through that fib? And you're going to say 2. And then we're going to have the lesson. Because the second you say 2 triggers through, I'm going to pull up this picture where it literally says probably not breaking. And then we're going to say, and that's probably what killed your trade. Alex, I love the bad trades too. And I've said it a million times. I won't tell you guys when to trade. Don't copy my trades. This is an educational room, and this is part of the education. And there's 2 ways you could take this loser if you took it. You could say, damn it, the market hates me. The software is crap. Mark's a jerk face. I can't believe it. Or you can say, all right, I'm going to remember that 2-3 triggers thing next time I look for one of these trades. And guys, that's why we take losing trades on simulator. You've got to be able to recognize the good stuff, and you've got to be able to recognize the bad stuff. And you don't do that if all you see is the good stuff. So I try to go through and take them both. Guys, it's simulator. I'll lose $1 million on simulator, but I'll get $1 million worth of lessons. So we're going to leave you here, and we're going to see if they want to go down. They're right to the fib. Absolutely no triggers through. Small chart is trying to lure you into a short, right? That's the perfect look. Large chart says, hey, maybe not all of your advantages in place. I'll be back in a few minutes, guys. Talk amongst yourselves, post some pictures, post some questions. Let me know what's on your mind and what you feel like you need help with, and I'll see what I can do to help you with it. All right, guys, here we go. Termination reverses the market, creates momentum. So now we're looking at the trigger lines. Two of them are above, two of them are below. You got to ask yourself, is this my best look for the long trade? Because the market typically retraces somewhere within these trigger lines. And if my stop goes all the way down here, is this my best look to enter all the way up here? That's all we're doing, is we're just asking. So we made it through 1, we made it through 2, we made it through 3. Guys, I still don't have 3 trigger lines through any of these areas. This is where some of you will say, well, I like the strong bottom, I like the momentum, maybe I'll take it with a confirmation bar. For me personally, I like to sit on my hands. We'll see. There's always another trade. We'll see how it reacts at this area. And while we wait for that reaction, S&P still has strong trending, clear path. Didn't quite make the mid band, made it back to support. S&P is going to make it hard to talk about. Guys, what do you want to talk about? What's on your mind? What's going to help? Let's see what TradingView says about the areas. Here's crude oil. It has strong triggers down, but all sorts of stuff in the way. Also has stuff in the way on the bottom here. Maybe not looking for short trades just yet. The S&P is right into an area, but this market is screaming north, strong trending. We'll see what it does. It's harder to do this live, guys, when the market doesn't give rules met over and over. Does everybody recognize this as an area that is not yet broken? Had potential. All right, now we've got 3 triggers through. Let's see if they come back for us. Strong triggers. 1, 2, at least 3 triggers through the Fibonacci area. I'm hoping breaks. If it pulls back to an area inside of triggers, guys, now we're looking at a good looking potential to break trade. And the only thing that we're not in control of is whether or not they give us the entry. Are you guys with me on this? Strong triggers, 3 through the area. Reversal bar prints, where's the market most likely to go down? Somewhere between the large and synthetic. Where's it most likely to bounce? Somewhere within the areas inside of the triggers. Stop goes outside where the market should not go. If I get a reversal bar in the direction of my trade, I'll reduce risk below the reversal bar. If I don't, it means I'm getting stopped out. Targets are predetermined at $100 and $200. There's my reversal bar. 1, 2. We're down to 7 ticks risk in the trade. And now we're going to wait and see what happens. It's either going to go up or down. What does the large chart say? The large chart says momentum up. But my path isn't clear. Small chart says you made it to the bouncy spot. We started going in the direction of the trade. Your risk is where it needs to be. We're going to see if there's any truth in advertising here. Come on, buyers. We're rooting for them, right? Go buyers. That's a pretty snazzy entry. Doesn't guarantee a winner, but boy, that sure felt good. I like the advantages. I like the look on that large chart. Decisions are made at these key areas, guys, and you can see the fight between the buyers and sellers. And we're just going to let it run. Oh, there it goes. And now some of you are saying, Mark, why are you taking losers in the room? Well, because you have to ask yourself, are my rules met? I'm going to go back to, once again, we're going to go back to those core concepts. Do I have strong triggers? The answer is yes. Do I have a clear path? And the answer is no. It's only the potential to break. Is there anyone that doesn't understand that concept? Until the small and large get above the area is only the potential. It's not a clear path. Divergence tends to mess up the breaking of areas. 2 divergences tends to make it worse. If we go back to, once again, that KISS plan, the best of the best way to take that area not broken is with absolutely no divergence, with strong triggers. And 2 divergences messes up the good time. So guys, what we're doing today is we're looking at the good. And we're also looking at the ideas where you're going to find yourself hoping a trade works instead of going back to the rules. You're going to say, well, these triggers are really strong. It should break. But there's things in the plan that we give you as a brand new user to help you avoid these. So what would be better? Not taking the trade because you don't feel like you have the advantages you need, or taking the trade and hoping that it works. And guys, that plan that I give you isn't based on the 1 or 2 times that things work. It's based on the 15,000 times that it doesn't work. And that's what creates the plan. So now the small triggers are down, the large triggers are up, everything is above support. Guys, I don't really have a long trade yet. I definitely don't have a short trade. We're in that transition area. And here's the deal that I think is pretty cool, is that transition area is dissecting Fibonacci. And you know where the area is, and you know where the fight can happen, guys. The easy trades are trading away from Fibonacci. Pretty cool, right? You know about it. You know where it's at. And now you just got to learn to be patient. There used to be this this document that I would post in the room, and it was labeled educational path, guys. And it used to say, in order to get to where you want to be the fastest, the quickest route to success, post your trades in the room. Post every trade. Post your wins, post your losses, post your break-evens. Because the key to understanding trading is being able to identify the things that you're doing well. And guys, we will celebrate that every time. And then being able to take the losses and understand what you did wrong. So, for example, if you took a 50-50 trade with 2 divergences, guys, this trade is more likely to push down than it is to push up. That is a result of the patterns. That's a result of studies. If you haven't taken this loser, guys, you don't understand that happens more often than it doesn't. If you haven't taken the pictures, you don't understand that. So these are the pictures that I want to see, guys. There's a reason that we're doing this. There's a reason that we're talking about these things. There's a reason that we're going through and showing the challenges, because the challenges are where we grow. And I'm doing this intentionally today. The challenges are where problems get fixed, guys. The bad trades, the mistakes are where you begin to move forward. Because when you take a trade that doesn't fit the bill, if you take the time to annotate, if you take the time to look at it, to analyze it, to see what went wrong, to go back to those advantages and talk about it, what happens is it begins to open the door for future trades. And there's some of you that said, well, the 50-50 failed, but the large triggers never blinked. There's my momentum style entry once everything agrees again to go up. And that's a look that you learn through experience. And what it does is it opens the door for more. I hope that makes sense, guys. Talking about a live market that isn't producing an awful lot of trades is difficult. But it's wonderful because it reminds you that there's going to be days where there's just nothing to do. And that's evidenced by you guys aren't posting a darn thing in the room today, right? Congratulations, you. Good job, you. Price reaches Fibonacci support. The large triggers are a full bar away. This is what we call the gap theory. And when it comes from a bad top, very often the market continues in the direction of the underlying trend. Paul, odds favorable, potential to break. When you get the pullback, it looks like you waited for the reversal bar 2 ticks above the reversal bar marker, and you ride it all the way up to resistance. Nicely done, Paul. Why 2 ticks above the reversal bar marker? Just curious. This is for my own curiosity. It's a 50-50, right? Potential to break. And you force it to go in the direction. I like it. If I'm waiting for that confirmation, once I get an up bar, I'm good. I'm not sure why you do too. That's okay. You probably have some study into it. But I love it. Once it goes up, if confirmation bar is my reason, I want to be as close to the close of that bar as possible. It's going to give me the least amount of risk on the trade. And just what a beautiful target. Right at Fibonacci resistance. Trading the potential to break, only one divergence, clearly defined entry, waiting for confirmation. Nicely done, Paul. Nicely done. Oh, right on. You've seen it fill and then turn? Cool. You know that that potential is there always, right? The potential for that market to turn is always there. But if you're stacking advantages, why not give yourself less risk, right? That 2 ticks above doesn't guarantee a winner. What it does is it guarantees a bigger loser. Does that make sense? You had it dead to rights. I mean, you knew everything you were looking for. Great entries, pull risk. There's our separation. Haven't reached the next area. I don't have any areas inside of triggers. So now I've got to go through. I've got 2 advantages on my large chart. Large chart's perfect, guys. Termination, there's a reversal. Separation between the small and large, absolutely nothing in the way. This goes back to the idea, can we use a confirmation bar? If I get a pullback to an area with the large chart perfect, can I use a confirmation bar for entry? I've got 2 out of 3 advantages, but I can't really define the perfect entry on my small chart. I'm on the wrong side of the triggers. Do you guys see that? Is it okay to demand that the market give you confirmation? Odds favorable, potential to break. Momentum trade doesn't work. Turns into a trend trade. Out before the second divergence. Girlfriend's account looking good today. And go tell her she's looking good today. It's like double whammy. All right. So we're going to let you guys decide. Large chart has momentum. Large chart has no termination conditions. Absolutely nothing in the way. If the market pulls back to that mid band, what do you guys want to do? Someone take control. I'll work the mouse. You take the lead. Once we get below these triggers, I don't know if it's going to be a mid band, a fib, another fib, a mid band here. I have absolutely no idea if or when that market is going to continue up. But with strong triggers and a clear path, I can say to myself, that's the first spot where the market may continue up. That's the first thing that may produce a bounce. And I just got to it. So I say, okay, I'm on the wrong side of the triggers. That's a nothing burger for you? So Better Dad, this was the conversation, right? If the large chart is perfect, but the small chart entry isn't quite where you need it to be, this is where confirmation bars make sense, right? And if I don't get it, I don't take the trade. If I get a third divergence, it's out. I'm just talking advantages every day. What's for it? What's against it? I don't have an entry. And watch, if it gets another bar down, it's 100% not my trade. But I'm right at the area that may create a bounce. I've got my momentum. I've got nothing in the way. What does that mean when the market went where it wasn't supposed to go? Oh, on the wrong side of the triggers? Okay. So Better Dad is saying, hey, look, once it gets below the triggers, I don't know. I choose not to take the trade. And I like that, Better Dad. So let's go back to this picture. The high probability trade means that you have momentum, path, and entry. That's the best of the best. A medium probability trade means that you've got two of the three, better dad. Momentum and path, but I didn't have entry. So the idea of using a confirmation bar says, and let me go back to the language. Let me go back to the entry language and the management language. Once the market gets beyond the triggers, the high probability trend trade is off the table. If I enter with momentum and path, it's now a medium probability trend trade. Does that make sense? So because 2 out of the 3 are gone, I don't have the entry area defined. Okay, so here's what I'm saying is if in the KISS plan stops are placed 4 or 5 ticks beyond the triggers, if the market is beyond the triggers, I have no logical stop placement. Does that make sense? I can't put my stop 4 or 5 ticks beyond the triggers because that's where the potential entry is. So better dad, this is where we can't use the initial stop placement, but couldn't we say that with odds favorable momentum and a clear path, if I get a reversal bar from the area in the direction of the large chart advantages, I could put a stop 2 ticks behind it. So if I get a reversal bar from an area, not a high probability trend trade entry, I can use that for stop placement because I can't use 4 to 5 ticks beyond the triggers. Does that make sense? So this isn't a way you're saying this is amazing and this is awesome. This isn't perfect. Let me force the market to go in the direction from that area, and then I'll put my stop behind there because I can't use that KISS plan stop placement. Whoops. And then when you crash Ninja Trader, we got to bring it back up. Yeah, for sure. But it all circles back to advantages. It all circles back to advantages. It goes back to the idea that the large chart had odds favorable momentum, that the large chart had nothing in the way. The large chart was coming from a termination that made it go back up. Like your large chart, better dad, is 173 flavors of awesome. Let me get this loaded back up. So if you wanted to take a shot, not saying that that is not going to produce a winner, but with this look, if you wanted to take a shot, momentum and path, I love momentum and path. Waiting for the reversal bar at least gives you stop placement. It doesn't guarantee a winner, obviously. There's a divergence, it pushes down, and you're on the wrong side of the triggers. So a confirmation bar doesn't guarantee a win, but what it does is it keeps you from arbitrarily jumping in where stops belong. And if you're so sold on the momentum and path, it gives you an opportunity to get in, to have a stop placement, and then when divergence prints, you're probably back out of it anyway. It doesn't mean that you have to take it. Guys, it's not a high probability trend trade scenario anymore because the market is on the wrong side of things. But there's a lot of you that are looking to branch out, right? And I think that the whole idea of this drill is that study some looks. But when I say you don't know if, when, or where, if, when, where, I don't have any idea what's going to stop the market once I get below it. But some of you are hell-bent on taking a trade with that look. I'm going to take this trade. This just gives you a way to at least have some place to put your stop. That's all it is. It gives you a place to put a stop. Does that make sense? All of you listening out there in TV land? Not saying break your rules. I'm saying if you're gonna break your rules, at least have something to protect yourself behind. I can't keep you guys from breaking rules. I can't do it. But I can at least try to cushion the blow when you do break rules. Let's go back to crude oil and see what it's doing. And the other idea of confirmation bars, and where I think they're more effective, is when both charts have everything that you need. So for example, I've got momentum and man, I lost my reversal bar marker. And the mid-band's the only thing in the way, but there's too much risk because of the trigger lines. These are my only areas for entry, and I'm missing fibs here. I'm going to try to rebuild a new chart here. And what it does is it just says, hey, you are 90% of the way there, but maybe there's too much risk on your entry. You're 95% of the way there, but maybe there's not exactly what you want it to be for entry because the risk is too much. And this is, I had to rebuild there. I had a bad chart. Obviously this one is a no long at any point. Directly into a termination, absolutely no triggers through, large triggers below. But what it does is it gives you the opportunity to say there's too much risk here. There's too much risk from this area to the bottom of these triggers. Maybe forcing an up bar gives me an opportunity to still take a trade, but I don't have to put $500 on the trade. So let's see if this was an example. All right, so we'll use this one as an example. And this is a better example because you still know where your stop belongs. But some of you will say, okay, the reversal bar can retrace between here and here. The market is most likely to bounce somewhere between here and here. This stop makes me uncomfortable. It feels like too much. And that's your own thing. I love it. I take this one all day long from a strong bottom. So you say, all right, normally my stop goes down here. Oops, I'm crashing everything today. But the KISS plan says once I get a reversal bar in the direction of the trade, I can reduce my risk. So all you're doing is you're saying, is too much risk here for my blood. Let me give myself something else to put the stop behind. Pull back, no trade, area outside of the trigger. So Better Dad, you and Joel are on the same page. I don't want it from here. Just not my thing. Let's see what you got. After this business, would you use this as an entry with confirmation? Since price moved back into the trigger window, I mean the smalls and the large on the small chart are 31 flavors of ugly. I like that you're using that. So when you're asking about confirmation, I think I answered it. So let's go through the advantages, right? Large chart has strong triggers. Large chart has a clear path. Large chart is coming from a strong bottom. Can we agree the large chart is freaking amazing? What a great look. Is everybody with me on that? This is the best of the best look on a large chart. I couldn't hope for anything more. So when I go to my small chart, I say to myself, my entry area is not defined because I have no areas inside of triggers. Is that fair? We're going back to the very basics. And guys, you're going to realize that I come back to these basics a lot. I have momentum. I have a clear path, but I don't have an entry area. Going back to that very core. So now I have to make a decision. So here's the decision. I have to decide. Is it one, all three not met, no trade, and that is a perfectly acceptable decision. Do I say enter with reversal bar from area because I can define risk now? Or do I say jump the fudge in and hope, right? So you have to go through this process, guys, every trade. Do I have strong triggers? Absolutely. Is my path clear? Without question. Do I have an area for entry inside of triggers? Dag nabbit, I don't. Guys, it's no longer high probability. And this is where you have to make decisions based on your plan. Some of you will say, and I think Pete said it in here, with a reversal bar, because of these advantages, I'll enter the market and place my stop below the reversal bar because now I can define risk. He also understands, and Better Dad, you know this perfectly, which is why you're like, whoa, that's not a trade for me, is you're on the bad side of stuff, right? It tried to go up and it just went right back down, and this would be a loser. And when you examine your loser, what you have to say is I broke rule number 3. I willingly broke rule number 3. So when we talk about confirmation bars, if the rules are like this, if the large chart's perfect and the small chart isn't, confirmation bar is really just giving you a place to put a stop. What's your highest chance of success? My rules aren't met, I choose not to trade. So we're using that as an example, and it's just not there. And it moves back into the trigger window, and I like that observation. But because there's no areas inside, and even if they were, you would be trading up into them as resistance, not as support. I think this is a great opportunity to simply not take a trade because you're on the wrong side of the triggers. And this is where a little large chart study comes in. So check it out. When I get to the wrong side of the triggers, it pushes lower. When it gets to the wrong side of the triggers, it pushes lower. Same thing, once you get below them, it pushes lower. Once you get below them, it pushes lower. Once you get below them, it pushes lower. Do you guys see that? Nobody ever does this. Why do we look for areas inside of triggers? Because once you get to the wrong side of them, you don't know if, when, or where the market is going to stop. I was using the confirmation bar deal because we were talking about confirmation bars. Only 2 triggers through. Large triggers were a full bar away. 3 divergences in the same price range. And then, so Better Dad, I'm just going to beat a dead horse real quick. This reversal bar, because the rules aren't met, is just a reversal bar. This is trying to trick you. I like it. I like exactly where your head's at with this. Let the rules be met, and then every now and then, guys, you're going to be forced into making a decision. Am I willing to take a trade without all 3? And the reality is most of you are going to be willing to take a trade without all 3. So what I talk about is how do we create smaller losses, right? How do we force it to at least give us a little bit of a chance? Confirmation bar does that. Good stuff. I love these lessons, guys. And look at this. Never had a clear path. It's still a weak top. All the divergences right at the fib. And we're just going, dag nabbit. I don't have a trade. I don't have advantages. Not yet, but they're coming. And the one that, well, the one that I just showed didn't have three divergences until after the fact, right? One divergence, two divergence. So I believe some people had a divergence here, but going into it, it only had two. Oh, not that one. Not that one. Hold on. Right here? Yeah, so three divergences. But check it out. Thank you for saying that. So check this out, Better Dad. You'll dig it. And let's just annotate, right? Weak bottom. So I know that if I'm looking for one of those potential to breaks, I've already got, where's red? I've already got one strike against me. And then here I have the gap theory, which means that all of this is terminations and the market is likely to close the gap back to the large triggers. So I've literally got two strikes against me. And this is where your brain has to say, with two strikes on the large chart, why am I even looking at this chart? Does that make sense? So we're always starting here. And that's why this one over here was so appealing, because the large chart was perfect. The large chart was so outstanding that some of you will say, I'll try it with a reversal bar in the direction with a little confirmation. Over here, you got to say, egads, this is horrible. This is horrible. I don't even care. Just get rid of that chart. This one's telling me no go. You had never even looked at this as a trade. You're just engaging the academics of it. I love it. So what we're doing as you engage the academics, Better Dad, is you're creating this Rolodex in your brain, right? And you're reminding yourself that if I speak, if my sole purpose every time I look at a market is to first go to momentum and path. Once I have both of those, the odds go up exponentially of me finding a way to capitalize. It doesn't mean that every trade will work, but it means that you'll get a little more creative. And until you can do that, you just kind of sit on your hands and wait. And that's a big part of every day. But if you look at, this is crude oil. And I love this because this look says don't go long, and this look says don't go short, and this look says don't go short, and this look says you might be able to go long, but you better do something nice with it. This says don't go short, this says don't go long, this says don't go short, and you're like, son of a gun. How am I ever going to make money in the market if I'm sitting here doing nothing, right? And am I the only one that's felt that way? How am I ever going to find a way to get rich if the market doesn't give me what I need? And then you realize that I am so freaking focused on finding a way to go counter at this blue fib. I'm so focused on trying to find a way to sneak in a long trade because I see a blue fib that I completely missed the idea that I had a straight shot, odds favorable, clear path, easy $200, $300, $400 right here. Does that make sense? And then I'm so focused on hoping I get what I need to go counter here that I forget that there may have been an opportunity here. And I'm so focused on maybe going counter here that, I don't know, maybe I jump in too soon, right? But there's opportunities. There's so many opportunities outside of the aggressive trade. There's so many opportunities outside of the hard trades, the stressful trades. And when you figure out how to wait for them, it's amazing. And that's how that chili dog trade that you guys take so well came to be. It's a gap filler. in between trend trades with the highest advantage on the large chart you could ever have. I hate waiting, guys. I'm not a good waiter. But even though I see momentum, I have to pump the brakes. Multiple divergences makes it easier for me to wait. Coming from a bad top makes it easier for me to wait. But guys, it doesn't make the waiting even any easier. You still have to do nothing. And doing nothing is one of the most admirable characteristics of successful traders. Waiting for an edge, waiting for an advantage, waiting for a pattern. So the road to becoming successful, guys, has got to be littered with failures. And I know that sounds maybe counterintuitive. You've got to make the mistakes so you learn how to avoid them. And you've got to take the trades when the advantages are there so you don't miss out on that great money that's available with low stress. And here we go again. Absolutely no triggers through support. Multiple divergences help me see it, right? And look how the market pushes up. And I can't take a confirmation bar for a short trade because the only thing it would be confirming is that I'm willing to break my rules. And it may go down and it may go up. But I can't go up without momentum. I can't go down without a clear path. I choose to wait. What are you going to choose to do? And look what they did up to here. The buyers were in control and the sellers pushed. And the buyers tried again right from the key area and the sellers pushed. Doesn't it make sense that the buyers might try again, that I don't have to trade into a termination condition? With this look, if this area doesn't break and smash down, that's probably where the buyers were trying to get. And we'll know in a minute. We'll know in a minute by what happens right here. Will the sellers be able to take over or will the buyers take off? We don't know. We'll find out in a moment. So let's play if then. If I get at least 3 triggers through this bottom area of support with odds favorable momentum, I can feel comfortable about taking a shot. If it rolls and it gives me odds favorable momentum up, I'll look for an opportunity. I'm going to let the large chart be right, and then I'm going to start hunting for opportunity on a smaller, faster chart. Had momentum, don't have path. No reason to take the trade. If I take a confirmation bar, if I take an entry, I'm breaking my rules. Does that make sense? How we doing today? It's different, guys, watching the live market all day long because I want to do a million lessons, but I need you guys to help me. What are the lessons you need? What are the lessons you want? What are the things that when you get to the end of the trading day, you're like, oh man, I wish I would have noticed that in the moment. This is where annotation really pays dividends. When you go back and just start writing your thought process on a chart. What did I see? So let's go large chart read. You're all right, better dad. So here's the other thing. And I mentioned this in the morning, and I want to mention it again, guys. When I started trading, I had the burden of being John Novak's little brother. And I would sit in this classroom. Cool. Does it help? That's the feedback I need. Thank you for that. I want to hear that this is helpful for you guys. Guys, I used to watch people make money from here to here. And I would watch people make money from here to here. And I would watch someone get in right here and get out right here. And I couldn't do it. I was like, son of a bitch, there's so much money to be made in this market and I can't find $1 of it. And this is true. That's a true story. And what I did is I started looking for the easy dollars. And once I found a way to make the easy money, the other stuff kind of opened up to me. Once I found a way to take advantage of momentum and path, it really it really set me up to find that short trade, right, Paul? There's your gap trade. A couple divergences, a close on the right side, right? And Paul's closing the gap to those triggers. Or Wayne is closing the gap to those triggers. And I see you guys take these trades. And all it is those patterns. It keeps you focused, attention on the rules. And guys, here we are again. It did go up, didn't it? Right to the fibs. So now we're waiting. All right. There's our strong triggers. Got to get below these 3 divergences though. 1, 2, 3 divergences in the same price range. I want to see it move down a little lower. I want to see that 3rd trigger come through. But here's one of the deals. No matter what happens, on this chart, I'm coming from a weak top. Which means that no matter how pretty this look is, the likelihood of success goes down because I'm not coming from a termination. I have to accept that. So we'll let it play out, right? I can't find what I need to take a trade. Therefore, I will watch the market and see if I can become a little bit smarter. I have a weak top, but I have strong triggers. My smalls have absolutely smashed through, but I have 4 divergences in the same price range. 3 divergences is a termination condition. 4 divergences gets me quoting Monty Python. 4 is right out. So I have to tell myself, it's okay. It's okay to not jump into this trade. It's okay to not be a part of this move. The next move is coming. And I just need it to push down a little bit further, and I'll look for the next move. But until it does, I'm cool sitting on my hands. We've already taken our 2 losers this morning by breaking rules, so we're going to focus on the best of the best, and we'll just see how long it takes. The other thing that we see a lot is you guys are going to go back and study this, and you're going to draw a circle on that tail, and you're going to say, if I just would have taken this trade, I could have, right? The historical hindsight's 50-50. So when you guys go back and study these trades later and you're circling these tails, one of the things you have to do is don't ask yourself, what did the market do after I had to break my rules? Keep it focused. Were my rules met? Because your rules should provide an edge. Your rules should be a pattern that wins more than it loses. Your rules should be something that gives you a statistical advantage every time you take a trade. Hindsight being 50-50 makes it tough. One of my favorite things is I had a guy post in the room once a long time ago. He said, yeah, Mark, he goes, I took this short. Whoops. He goes, I took this short right here. And then I exited right here. And then I took this short right here. And I exited right here. And then I took this short right here. And I exited right here, because I knew that divergence was going to print. And then I didn't take the same short that I took 4 times before. I waited for it to come up here. And then I exited right here at the very bottom of the move. And then I took this short. And I'm like, dude, there's no way. There is absolutely no way you called every turn in the market. Better Dad, this is what happens when you use hindsight to decide what you've missed out on. People had someone post in the room. He said, oh yeah, I would have caught every one of these moves, to the low tick, to the high tick. And when he's done with this fictitious plan, he goes, and I made $1,200. No entries, no truthful entries, no rules met, but because he can see what the market did, because he can see what the market did, he would convince himself that that's the money he should have made. Odds favorable, 3 triggers through, still from a weak top. If you choose to take this trade, that's going to be your problem, along with 1, 2, 3, 4, 5, 6 divergences. That's a grind. And sometimes with this look, you'll say, you know what? I'm willing to take a chance based on this look, even though my small chart isn't perfect. That's how plans grow, guys. Is you start to see advantages, and you start to hear those advantages ringing in your head. I have this. I have this. This is amazing. This is outstanding. This is incredible. This isn't my best look. Some of you will say, I'll take it at the mid band. Some of you will say, the only way I'll take it is if they get me right up here so I can have 5 ticks of risk to try to go with this momentum. Some of you will say, give me a confirmation bar off the areas inside of triggers and I'll take a shot. It doesn't change the fact that you still don't have a clear path on the large chart. And it doesn't change the fact that it's still coming from a weak top on a large chart. Does that make sense? This is that progression. This is that nuance. This is when you guys begin to take it from black and white and start to add shades of gray, where you start to say, hey, I have this, this, and this. It's worth $100 to me to see if that momentum pushes it down. Does that make sense? I hope that makes sense, guys. All I'm doing is I'm going through the way I talk to myself if I'm looking at a live market. And guys, there's so many fights happening at these fibs. And we're struggling. Now I have odds favorable momentum and a clear path. Only 2 divergences. Haven't reached the next fib. Now the large chart is perfect. If I get a pullback without divergence, I'll choose to take the trade. We'll see what it does. But now the large chart is perfect. Whoops, and now it's not. Son of a gun. This didn't even give you guys your jump-in trade. Didn't even give an opportunity for that jump-in trade that you guys like. Now we're to blue fib, no triggers through. Dagnabbit. No triggers through the fib. Multiple divergences. Dagnabbit. You made up for your previous mistakes, Alex? Let's see what you did. Momentum. Not quite a clear path because you're trading into the divergence low. Clearly defined entry. Your Yahoo trade. You jumped in. Catch it on the way up. Odds favorable momentum on 3 charts, Alex. So let's do this again. I love doing this. I have momentum. No clear path. Perfect low risk entry. And if you trusted your entry, Alex, instead of being in up there at the Yahoo entry, you're in down here with virtually, super small risk. 2 out of 3. Manage assertively. Two out of 3 advantages, and all we did is go back to those core advantages again. Medium probability, manage tight if something changes. And Alex, nothing ever changed. And it's an easy trade to get up to resistance. Now here's the question that you have to ask yourself, Alex. I've got a huge fib right here. Get off of there. I don't have any triggers near it. Is it worth giving up 30 or 40 bucks, hoping it breaks, when this doesn't suggest that it might. We had this lesson earlier today too. Alex, if you're screaming into it with odds favorable momentum on both charts, maybe. But if you find yourself with weakened triggers well below the area, that area is more likely to create a bounce. It's all right to get paid right at it. This is a beautiful trade. But do you guys see how we did that? I have momentum, but I don't have a clear path, but I can define a low risk entry. 2 out of 3. If something changes on the way to my target, I'll exit the trade. Great trading, Alex. So the difference between 26 and 29. Here's a good lesson. So the difference between 26 and 29 on a 6 lot. It's $30 times 6 lots, $180. So Alex, the difference between getting out at trouble and hoping trouble breaks when the indicators say that it won't is a $180 difference in the trade. Not a big deal, right? I'm cool with that. What if you gave back $180 every day for an entire trading year? This is the magic of Fibonacci, guys. When you don't have the strength to break an area and you reach an area, it's okay to get paid. The next trade is coming. And you guys that talk about, I want to make $300 or $400 a day, I want to make it consistently. It's things like this that make that difference. It's that little management concept. Triggers didn't get through, multiple divergences. I'll be damned, it went up. This one, right into a termination. This is the bummer. This is one of the bummers. There wasn't a trade for me to take in there. Hey, JR, it's actually Mark. John is my big brother. He doesn't run the room anymore. No, not Junior. Definitely not Junior. We grew up in the same era. He's my older brother. You're Junior. Oh, right on. You're Junior. Yeah, John stopped teaching this room a while ago. Oh my gosh, 3 years ago? So he could focus on all the other great stuff for you guys. Good to have you in here, though. I recognize the name. So guys, there's your termination. Small chart starting to show change. There's actually a trade that is a momentum trade that says when you have a termination and you get a snapback to an area right at those small triggers, if you want to take a shot, knock it out. But because it's only based on a quick movement, it's a super, super tight stop. Give it about 2 down bars. And if those down bars come down and get you, game over. Termination, triggers roll, buy the snapback to the mid band right at the triggers. As we get up to that mid band on the large chart, why not go break even? Absolutely nothing to lose. Have you guys ever seen this trade? Termination condition holds, let the small chart show change. That's your momentum trade with the small triggers up strong. Right at an area, gives it something to bounce on. And guys, you can hold this trade. Watch this. You can hold this trade until you get a close on the wrong side of the triggers, because this momentum is going to keep pushing the market up until that happens. So we're going to chase that one as far as we can chase it. We could choose to just get out right at a key area, right? Because the triggers don't say it's likely to break. Let's just do that. Let's see if we make that target. Oop, it tapped it, but didn't fill. Get up there, close me out. There we go. So from 43 to 48, 5 points, $100 here, $250 here. Guys, that is a rules-based momentum style trade to take advantage of a termination. Nexgen has been teaching this trade for 20 years. Pretty cool, right? It just fits the rules. I'm obligated to take it if this trade is in my plan. Well, Mark, I'm not ready for that. Let's see if you are. So guys, play along with me here, please. Does everybody recognize that this is a termination condition, that no triggers have gone through, and it says absolutely no more short trades? Do you guys have that? We learned that in the high probability trend trade. So if you recognize this, tell me if you recognize that your small chart has created odds favorable momentum, strong triggers, right from that key termination. You guys recognize strong triggers from the high probability trend trade. Price pulled right back to an area that's lining up with those small triggers. That's your momentum trade. There is about, with this trade, maybe 7 or 8 ticks of risk, because if it goes down 3-4 bars, guys, the momentum is gone. This is a trade that allows you to capitalize on your understanding of terminations, that allows you to capitalize on your understanding of strong triggers, and the recipe for it is break above that mid-band and snap back to it right at those small triggers. Guys, Nexgen has been teaching this momentum style trade for probably 20 plus years. I want to say it was 2004 when it first came into play. So are there more opportunities than high probability trend trades? Of course there are. You've just got to learn your basics. That's an HVA trade. Fibs hold, triggered roll. Well, there's your snapback right to the mid-band, right at the small triggers. And here it actually coincided with an HVA. Exact same look. It's your snapback to the mid-band, right at the triggers. There's your look. Fibonacci holds. Small triggers get above the area, snaps back to the area. That's your momentum trade. So that's kind of fun to be able to do that live. But guys, we've been teaching this one for an awful long time. Is anyone mad that we only made $350 getting paid at the fib? I'm not. I'm totally cool with it. Because what my chart said when I got to it is that there's no indication that this fib won't create a bounce. It didn't this time, but there was no indication when I got there. So I chose to exit. I chose to take my profits. I'll wait for the next trade. And what we just did, guys, and I want you to look at my P&L, is the 2 trades that we took where we broke rules hoping for victory. This one trade wiped him out and put us $40 good. Imagine if we weren't 270 in the hole from breaking rules. Those of you that want to make $300 to $400 a day, you'd be at your goal. You'd be shutting down. You'd be going to do something else. That's what I really want you to get out of this. We undid the rules breaking with a rules-based trade. Now, what happens when you learn to omit the silly? What happens when you learn not to take that last short into the termination? What happens when you learn to be okay not taking the short into the termination? Pretty cool, right? And that's it. That's a 2-lot, Paul. When you get comfortable with it, is there any reason you can't do it on a 4-lot and make 600? Or an 8-lot and make 800, right? I mean, that probably wasn't the right math. And now we're back into resistance. We do have strong triggers, but there is zero indication that this area wants to break yet. Let's sit on our hands. So guys, if you are, have you guys set what you need to make every day? I think that's one of the challenges people don't do. How much do you need to make every day? What's your goal? Is it $300 a day? Is it $400 a day? Is it $1,000 a day? What's your path of least resistance to get there? Because I think we just proved, right? We just proved, Paul, that is 200 to 1,000. So, Paul, what you're going to do is you're going to hit your goal and you're going to let greed push you for another 8, and you run the risk of missing your goal. That's not a goal. A daily goal is not a giant range, guys. A daily goal is picking a number to get to and stopping. And what does that do for you? If my daily goal is $400, we'll just type down here. If my daily goal is 400 and I'll shut down, mentally, I know it's easier to hit. I know I don't need every move to get it. I don't have to break rules to make it happen. And what's the hard thing? I have to stop when I hit it. I have to stop when I hit it. So often, guys, new users, right on, Paul. Oh yeah, if you're in a trade and it's running, don't shut it down because you hit your goal, right? But it doesn't mean you have to take the next trade. This is the biggest challenge for 99 out of 100 traders. When you hit your goal is on your trading plan. And your trading plan says that in order to find the success I need as a day trader, I need to make $400 a day. That's your plan in the moment. That means that when you hit $400 a day, did you guys notice this morning Cav and Pete posted at 8:20 a.m., I hit my goals, I'm going to sim. I hit my goals, I'm going to sim. It doesn't mean that you don't have to stop trading. But guys, you made your profits. You did it. Congratulations. Did you know that $400 a day is $2,000? It's $2,000 every week, guys. It's $8,000 every month from only $400 a day. Is there anyone in this room that doesn't believe if they could eliminate a couple mistakes, if they could find just a little more patience, is there anyone that doesn't think they couldn't reach that? Everyone tells me I could make $400 easy. I could make $200 easy. What's keeping you from it? That's what's going to make you an amazing day trader. Instead of believing that the market is against you or feeling like there's not enough opportunities, what's going on? What's keeping you from your goals? If you post in this room, I'll help you identify what's keeping you from your goals. I do it every day. That's my whole job, is to say, hey guys, look, no triggers through, that's not your trade. The challenge is a lot of you want to take it anyway because you feel like you're missing out. This trade that I took, that's not a beginner trade. But let me show you how understanding the beginner trade opens that one up. Because the beginner trade is the high probability trend trade. And it defines the momentum that you needed on that small chart. And it defines the termination condition that you had to have on that large chart. And your entry area, it just changes based on the trade. Everything comes from the high probability trend trade. It's like that chapter in the Bible where everyone begets. Have you seen that? Where Bob begets Sue, begets Bob, begets Joe, begets momentum, path, find a way. So now we have the termination condition. What's the difference? My large triggers here haven't rolled the way they did here. I don't have strong triggers on the small chart. Therefore, I'm not looking for the momentum trade down. It's subtle, right? It's pretty subtle, but there's a difference. Those are the things that experience brings you. The termination is there, but the roll hasn't happened yet. Therefore, no short trades yet. Does that make sense? I never saw that in the beginning. When I was a brand new trader, The most common phrase in the room was, it's obvious. Well, it's obvious that this is your trade. It's obvious that you should have been long here. It's obvious that that's a no short scenario. It wasn't, not at all. And the better I got at reading my indicators, the more I understood momentum and path, the more I strayed away from following rules. Anyone else have that amazing phenomenon? I'm getting good at these patterns. I'm starting to recognize things. I feel like I could break some rules. I feel like I could get away with it. Man, I did that a lot. So much so that so I write myself notes on my desktop. And one of my notes was, your read is not your rules. And I needed that for a while. I needed to remember that my chart read, strong bottom, odds favorable, I have to avoid the temptation of saying this fib should break. That's the temptation. And I just killed NinjaTrader. It's about to die. I have to not say this fib should break. I have to say this fib has the potential to break. Let me wait. Or this fib is the one thing that's keeping me. And I'd have to change my ideas. My read says the market should go up. My rules say I need just a minute. I need just a minute for it to be better, for that advantage to be more clear, for that opportunity to present itself. And guys, that's the hardest part of trading. It really is. While this loads back up, I'm going to take a few minutes, guys. When I come back, I know that there's a lot of you that are doing TradingView as well, that are looking for opportunities in TradingView. If there's anything I can do to help you with that, let me know. I'm happy to go through it, to run through it, to talk about it, and to help any way that I possibly can. So I'll be back in just a couple minutes. Post them if you got them. If you have questions, let me know. Back in a minute. And I don't know which it's going to be. The market's either going to continue up and give me the potential to break this area from a strong bottom and 3 triggers through, or it's going to roll over here and it's going to set me up for another one of these bad boys. There's no way of knowing which one it's going to be. So one thing you can do, guys, and this is foolproof. I mean, this is as scientific as it gets. Is you can go to the magic 8 ball and you can say, will the market go up? And the 8 ball says it's decidedly so. So you can use this, and I don't know the effectiveness of the 8 ball, but that's about as close to prediction as you're going to get. Or you can wait and you can say, all right, I've got 2 options. Either the market breaks and I look for a long, or the small chart rolls and gives me that little momentum snapback, and in which case I'll look for a short. You guys see how I've given myself 2 scenarios, one that capitalizes on either direction, and now I just sit here and I wait. One of them's going to happen. One of those is going to come true. And I don't have to predict. Let's open up crude as well and see what it says. What do you guys want to talk about? I love talking about the live market. That's shenanigans. I can tell that from the get-go. I love looking at the live market. I love talking about what we see. Um, just a little insight into my brain, guys. I get this complex where I feel like if I'm not in a trade for you guys, I'm not doing you guys a service, but I'm focusing on rules. And look at this. Don't go long. Oh, it tried to go short. And guys, I'm missing a fib. It did it again. I need to save this workspace. I had to rebuild my crude oil large chart this morning because I was missing fibs and a reversal bar marker. But when NinjaTrader crashes, it doesn't save my fix. So I'm going to bring up the new chart real quick. And then once this is up, I'll save my workspace. But you can see how there's nothing to do here. So let's try this. Let's get some class participation real quick. Can you give me a Y if you recognize that you don't have momentum or path for a trend trade? Jen, there's your termination, triggers roll, snap back to the small right at the area. Termination, triggers roll, but my smalls are struggling, but that's it right there. If you were going to take a shot, and maybe 2 ticks below. Do you see it, guys? Snap back to the small triggers in the area after the termination. That's it. These guys are still stuck like Chuck, aren't they? Can't go long into fibs. Can't go short against all my indicators up. What's a boy to do? Uh-oh. Well, there's a second divergence from that fib, but it's still odds favorable up. Large triggers are still up. I don't have the momentum that I need yet. That one worked. Right up to the divergence high. Does it fit the recipe? First it's a termination. Then I get strong triggers here, small triggers, and snap back right to those vertical triggers at an area. Here it failed. And there it never set up. Here it never set up. Here it failed. Never set up. Kind of crazy. You can go back and just look at it and study that pattern. Uh-oh. Let's see what happens. We are fighting momentum on the large chart, but we had a termination. Our triggers rolled. They're strong, and they're right at an area. Do you guys see it? First it's a termination, then my triggers roll, produces momentum, and all it is a momentum trade, guys. It's a little snapback right at an area, right at the small triggers, and my risk will be a couple ticks above this reversal bar, because if it goes up a few bars, it's not my trade. Whoops. Do you guys see the setup? First it's a term, large roll, produce odds favorable, looking for a snapback right to the area. Nobody sees it? Everybody sees it? Does it look like that one? It does. Now they're going to make us wait. Now they're like, all right, Mark, you're live. I gave you 1. Don't know if I want to give you 2, but let's give it a go. Your rules are met. You guys with me? Are you against me? Does it fit my rules? That's the real question. Does it fit my rules? If it does, I'm obligated to take the trade if this trade is in my plan. Doesn't guarantee a winner. But what it guarantees is that I'm trading a pattern that I can prove provides opportunity. And they're just making us wait. So let's go through some subtle differences. Here, I'm above the large triggers from the large chart. Here, I'm trading directly into the large triggers from the large chart. Not exactly the same look. Here I have strong triggers. Here I have weak triggers. Do you guys see the difference between the two trades? It's the same concept for entry. Here I have weakness, and I'm on the good side of the triggers. Here I'm fighting the strength, and I'm not quite through the triggers. The rules are the same. Which one do you suppose creates a higher opportunity for victory? Does anyone have a guess? I'm willing to take both because it fits my rules. I'd need that pullback pretty quick though. If I don't get that pullback soon, it's really not a momentum trade anymore. Then I kind of have to wait for it to become a trend trade. Just hanging out talking about what we see. Well, didn't quite set up. Odds favorable, no clear path. Some of you confirmation bar users took it, managed out of it. There's a trade that was taught in 2004 that when a termination rolls the small triggers, sell a pullback to the small triggers. Well, guys, that happens to be this one right here. The only thing that we don't have is the small chart cooperating. Awesome. Better Dad, I think that's one of the advantages of the live is you realize that it's not you missing things. It's just that there aren't things to be had yet. And I've got the pressure, right? If I'm going to break a rule, I have to tell you guys that I'm breaking the rule before I take the trade, or you think I'm just a crappy trader. If my rules are met, I have to tell you that the rules are met before I enter the trade, or you think I'm just breaking rules trying to show off. And I've only had, what, one rules-based trade? And a couple, well, a lot where I could have broken the rules. Two that I actually did break the rules. So now we have a termination. It reverses the market. The smalls are below the large. The large haven't really opened up yet, but I've got momentum. I have a strong top. I haven't hit the next fib. Could we look for a pullback to the midband? Well, not anymore because we hit the fib. So now we go back to, let's see what happens. Is anyone tired of hearing that yet? All right, let's wait and see what happens. And guys, this was a great example. Sometimes they don't give you the trade. You have it. The rules are met. It's beautiful. You can't wait. And they just don't give it to you. Termination. Price reaches support. All the triggers are above it. Can't go short. Trend is up, right? But I don't have a long trade. Guys, crude oil is behaving like somebody got bombed in the Middle East. This fight right here is the fight you don't have to be a part of. That's one of the cool things about having rules. So now I start playing the game. What are my options? If this termination holds, if these triggers roll and give me odd favorable, my first trade is the snapback to the midband. It's got a lot of work to do that. Or it's got a break. But man, do I need to be in a trade when my market looks like this? Smalls are down, large are up, everything's above these areas, everything's below these areas. Let me show you what your path looks like. Is that a little perspective? The market is going right now. It's hard to make money going right. All right, there's our term. We're not above the large triggers. The large triggers are still down. I don't have a rule for that look. Strong top, odds favorable, 3 triggers through the fib. Let's get one more trigger through. Can we say because it's medium probability they have to get me at the midband and run the risk of missing the lower shot? But that's a strong top. That's odds favorable. That's potential to break. That's the area inside of triggers. Initial stop, 1, 2, 3, 4 ticks above triggers where the market shouldn't go. Notice that we don't have 3 triggers through the area though. That is the one fly in the ointment in an otherwise beautiful trade. I don't have 3 triggers through those 1-to-1s. Let's see if it makes a difference on this trade. That would be my broken rule, right? That would be my thought that that's what's up against it. So it's medium probability. It's a good look. It's not the best look. But with a strong top, with all this momentum, with the potential to break, guys, I'm willing to put 2.5 points on this trade. I'm willing to risk $100 or whatever that is. If it hits my first target, actually reversal bar, I'll reduce risk. If it hits my first target, I'll go break even. Look at them dance around the fibs, guys. They know where these numbers are. There's my reversal bar. I have considerably less risk. The 1-to-1s represent a place that I'm hoping breaks. Couldn't I just put my first target on the 1-to-1s? Get paid at treble? Go break even and hope for the best? Perfect entry. Market didn't go where it shouldn't. I got paid on the first one. I have nothing to lose on the second one. I'm going to take my hands off the mouse because I know it's not the best look. Why hope? There we go. Anybody sad about $100? For those of you that need to make $300 a day, you just made 100 of it. And you may have exited early, but you got in the right spot, you moved your stop at the right place, and you know that it's only the potential to break, and it doesn't have 3 triggers through. So you get paid and you hang out. And this might be one of those times where you say, if it comes up and gives me a reversal bar, maybe I'll take a second chance. Maybe you say, I'll hold the trade longer because of the momentum, because there's no divergence, right? And that might have worked too. But we went through what was good and what was bad. What is in favor? 99% of the world was in favor of this trade. The challenge that I had is that I didn't have 3 triggers through the area, and I recognized it. So I managed assertively. This time, it bit me. But guys, we've got 2 successful trades. We have undone our problems from the morning. And you $300 a day traders are looking at you're halfway there. What if it pulls back to the area inside of triggers without divergence? And now we're getting 3 through the fib, and we're getting closer over here. Could there be a second entry? Could there be another opportunity? Have to wait and see if divergence prints. If divergence prints, it might not be mine. But if it pulls back to the areas, gives me a couple bars, divergence isn't true, I can do whatever I want. We'll see what happens here. First one was first target, break even. Have to wait and see what divergence does. There, divergence prints. So now it's a 50-50 trade. And divergence prints. And I don't have strong triggers. And 3 triggers aren't through. Guys, I'm going to make the choice to not re-enter the market at the area inside of triggers because I feel as though I'm losing my advantages. Does that make sense? Does everyone follow the thought process here? First entry, beautiful. Second entry is a little wonky, and it still might go, but I'm getting a trend change. I'm getting divergence. It still hasn't broken. There's not 3 areas. I'm giving up the things that make it great. And now I'm starting to say, oh man, it's going to go without me. Now I'm mad. I'm not mad, guys. I made $100. Made $100. Do it 3 times a day. Your account doesn't know if you made it $100 at a time or if you made it 300 in one sitting. Be interesting to see what happens here. We'll come back and revisit it in a moment. This is just garbage. Got momentum, not a clear path, area inside of triggers. 2 out of 3. Some of you might make a decision. Man, they didn't just rock it down, did they? Have you guys ever noticed that the best trades tend to run the fastest? That the best trades tend to just zip off and go? I've noticed that. We're going to see what happens here. Maybe they push down and give us another opportunity. Maybe they push up and we're glad that we chose to exit. I don't know. I don't have rules met anymore because of that divergence. So my plan says, hey, Mark, relax. The next one's coming. How are we doing today, guys? Is it confusing? Not having that hour of 101? Is it easier just to talk about advantages every time you look at a chart? I think that's the easiest way to do it. And I think that if you guys start doing it as well, you'll be floored at how stress-free trading can be. Do I have momentum? Absolutely. Do I have a clear path? Absolutely not. What's the tiebreaker? My small chart. My small chart told me to get bent. My small chart said, you know, Mark, divergence can kill it. Pivot stop out's horrible. Your large triggers are coming up. You don't have 3 triggers through. I mean, stop hoping. Just wait for the good one. You dig it better, Dad? Good. I had a feeling you would. I think what this does for a lot of people is it lets you know that you're right where you need to be, even though it doesn't feel like it. You feel like you're missing trades. I'd love to, Junior. Let's do that. Let's do it a couple ways. Are you making that switch over? Oh, the charts are the same no matter what it is, no matter what the market is. It normalizes the process and the waiting. Thanks, Better Dad. I'm telling you guys, that's the feedback I need on this one. So JR, let's go through, and I'm just going to run through it kind of basics. We're going to use a slideshow and a little interpretive dance because I find that the combination of the two makes for a much better presentation. Let me pop this over. So So the trading view chart, and I'm going to do it like this. The one thing that I want you guys to realize that if you're making that trading view switch, if you're making that trading view move, um, you're not really relearning anything. It's pretty cool. So TradingView uses triggers, small and large, the same way NinjaTrader does, right? When I have a separation between the small and large, I have strong triggers. When I don't have that separation, I have weakness. It's not a coincidence that the market went up with weakness. You're welcome, Better Dad. Man, you guys have a blast. National parks are cool. And if you're a national park person, make it to Big Bend in Texas sometime. Freaking amazing. One of my favorite ones that I've ever visited. And I've been to a lot of them. We'll see you when you get back. So triggers on every chart the same way, right? There's divergences. Anytime divergence prints, guys, it's a loss of momentum. Oh, very cool. I haven't done Mount Rainier yet. I've driven by it in Olympia. That's one of the things we're going to do before we're out of Spokane is the Olympia and Mount Rainier are on the list. You guys know I've got to share this because I think it's really freaking cool. Saturday morning, I'm going to pour a cup of coffee and I look out my window from the kitchen and there's a moose. There was a moose walking in my yard Saturday morning. Sorry. Divergence, JR, same as Ninja. Loss of momentum, it can stop a market when it gets there. So we'll use these as termination zones as well. You're going to see them on both. So one of the differences, JR, is it's a minute chart, not a Renko chart. But these are, all I'm doing is I'm talking about the indicators right now. So we're just naming them. You're going to see the one-to-ones. Trade to them, trade from them. Don't worry about trade rules yet. Mid-band, outer bands. The mid-band is what you're used to. The outer bands are just exhaustion points. And then the one thing is the zones. So if you're making that transition, Chart Prime has amazing zones. Support and resistance. And they're just going to help you where potential tops and bottoms are. So that is the basic indicators. And there's really not a difference. Let me drop this for you. That's the indicators, little read through that you can have. And the next thing is I'm going to go to the plan. So the plan, John Novak and I spent about 6 months, I think, maybe 5, working on this, going through. All of your workspaces are right here in the plan. Let me drop this in here. That's the PDF form. So there's 2 charts. It's still big chart and little chart, Junior. But the 15-minute chart is your big chart. And this is the roadmap for key targets. Turning points and terminations. That's awesome, Paul. I got chills. So the trigger lines on this chart are going to define the direction and the overall momentum of the market. And when both triggers are in the same direction, it's the absolute best. And to go the other way, you need the faster 8-3 triggers cross in your favor. Your 1-minute chart is going to have market flow on it. And this is going to be immediate strength and entry points. And you're going to look to buy pullbacks at broken zones, one-to-ones, mid-bands. And you're going to see some examples here. So entries come from the 1-minute chart, and they come from mid-bands for trend trades, HVA lines from terminations, and HVA lines for momentum. So there's a couple different ways to do it, but it's still big chart, little chart. And then you've got the trend trade, you've got the HVA trade, and you've got the momentum trade. These are your checklists to get into them, JR. But if you've ever met me, I'm an overachiever when it comes to study. So I'm going to drop this in. This is the trade journal that I've been working on. I think we're going to get it available on the site. Just a lot of examples of HVA trades. So on this HVA trade, you're going to see the correlation between the two. First, you hit a zone. You hit a zone on the big chart. When your small chart rolls and it pulls back to an HVA line, that's your long trade. Using the large chart turning points, letting the small chart show change, and using that HVA line. And that is one of the trades that you're going to see. You're going to see the trend trades. And the trend trades are my favorite because small triggers are coming down. They're below the large triggers, guys. We're inside. And while it's not the same, yeah, it's not the same as a Renko chart, right? You don't have strong triggers, clear path, because this 15-minute chart, JR, takes forever to show change. But when you're below all the triggers, when your path is clear down, when your small triggers are pushing that direction, you're just going to sell a pullback to a mid band. And you're not jumping in at the mid band. You're getting in on the close below those fast triggers. And then that is your trend trade down. And then we'll go back to the HVA trade. First, a zone is reached. You're working through the management on the journal. I like it, Claire. And please, if you find stuff to add to it and share it with me. I want to build this thing out. So it's the area reach, JR. That's rule number one, Junior. First, we hit an area, and then once you reach the area, the same way we did up here, you're going to turn to the smaller, faster chart. Small triggers have to roll up, produces an HVA line, buy the snapback to the HVA. So as you go through it, the area holds on the large chart. This is what your entry looks like. Pulls back right to the HVA line, sell it, and go down with it. Zone holds on the large chart, small chart rolls, sell the pullback to the HVA line. So what this is doing is it's creating an opportunity for you to capitalize when the market hits an area. And you'll notice that it hits the area here, but you never get those rules met for an HVA trade. Coming off of the top right here, comes down, pulls right back to the HVA, and that begins the move down right off of the zone. So all you're doing is you're looking for the opportunity. Price hits the zone, and that probably happened, let's see what time that was. 9:35, 9:35. That was your push down. Hits, oh, that was news. So there was a big spike. That one's kind of hard to read, but it gives you that HVA look. And this repeats itself all over the place, but it all starts. So here's your zone reached on the large chart. And there's your roll, but it doesn't give the HVA. You never got the HVA, so sometimes you're not going to get an HVA. Prices reach the zone right here. Triggers haven't even rolled. No HVA line yet. Nothing to do. It's still a matter of waiting. You're also going to be able to use these looks. When everything says up, pull right back to an HVA and buy it. There's your entry. There's your low. There's your first HVA. There's a pullback to the next HVA. So it takes a little bit of study, but we've given you the checklists, and I've got this trading guide to give you some looks. First, the zone holds, triggers roll, buy the pullback, and you'll see that it's really consistent. Zone reached, triggers roll, sell the pullback. Does that make sense, Junior? That's the first trade in the plan, is the HVA. And it's the first trade because it helps you capitalize when your large chart catches something that could stop it. Your small chart shows you the change. The trend trades I love. I love the trend trades. And the reason I like them so much. So here you have the termination. The triggers roll. And it pulls right back to a mid band. But the rule for entry says close on the correct side of the triggers. So you're like, okay, I'm waiting. I'm waiting, go. And once you get to the good side of those fast triggers, that's where those trend trades just seem to rocket. Um, and I take so many pictures of these trend trades. This one's in the trend trade section. It's called No Entry Patience. Everything says up on my large chart. My 15 says, man, let's go. And I get back to my mid band and I'm like, okay, I have to wait. I have to wait. I have to wait. I have to wait. And you can actually use the timer. And this timer for me is just, it's heaven sent. I'm like, okay, I could try to anticipate the close, but I've still got 44 seconds. I have 44 seconds for this market to crash right through it. So that's your patience piece on these trend trades is waiting for that close on the correct side. Here's gold. Everything is up, haven't reached trouble. Pull back to the mid band. I got my close above, but I missed it. And I got in at 81.90. So this closed, I hit go. My entry is about right here, but I'm on the good side, and it was a pretty easy trade to go up. So that's your trend trade. And then your final trade is, man, just believing in momentum. Let's go to the live market. And when I say just believing in momentum, when you've got strong triggers, and let's see if we can find an example over here where we actually have strong triggers. Odds favorable, everything up. I need to fix those two and make them one. But what you're looking for, break a zone, buy the pullback. Break and go up, find an HVA, buy the pullback. Go up, break a zone, buy the pullback. 1-to-1, buy the pullback. And it's predicated by momentum on both charts. Momentum buy at the HVA. I've got strong triggers, pulls back to the HVA, continue up with momentum. Go in the other direction. And all of these pictures are there for you. Strong triggers, breaks below, pulls back to the HVA, sell it, go down. And there's another example right there. Strong triggers, pull back to the 1-to-1s, continue down. So you can capitalize on momentum there. And all of these momentum trades, trend trades, HVAs, you can go through and look at them. A lot of ideas on management that I'm putting in there just to try to make it easier. And then reasons why not to go long or short. It takes just a few. And here's a good example. What does price do until you're with the fast triggers? So see the small triggers on the 1 minute? Bounce off, bounce off, bounce off. Now they're starting to weaken. And once you get a close above, it gets better. And once they're going in the direction of your trade, that's where you really see those trades take off. These small triggers on the 1 minute are gold. Once you trust not to fight them, it takes a lot of the stress out of this trading view stuff. Paul, have an awesome afternoon, man. Thank you for being here. So just like anything, and those of you that have gone through the process, so Junior, my deal was when I started with TradingView with John Novak, is I hated it because the only thing I had ever done was Renko. That's it. I'd only done Renko. This doesn't look like Renko. These are minute charts. And John told me, he goes, Mart, we didn't always have Renko. We taught everything on minute charts. This is nothing new for Nexgen. He goes, so treat it the same way you treated it learning Renko. But don't treat it like it's NinjaTrader. It's not. It's a different platform, and there's different looks. And you'll never see change on this large chart as fast as you'll see it with Renko. So let the large chart show you potential turning points, right? Let it show you potential bounce points, and you'll be able to find ways to capitalize on the small chart using a large chart look. And if you're doing NASDAQ, you've got strong triggers up. The smalls are above the zone, but the large are not. You have momentum here. It's right into the mid band, maybe not a trend trade short. It's right into the HVA, probably not a long because of the problems. Is it okay to sit on your hands and do nothing when you can't seem to figure out which way it wants to go? I think yes. And I think that's what having those rules does for you, is it puts you in a position to just be a little patient. Boy, they tried to break it, didn't they? But they're stuck at a fib over and over. Whew. Right to the fib. Pretty cool, right? Some of you guys said, hey, I have momentum and path. Let me catch that snippet when I break above the divergence high. Let me take one of those momentum trades. Huge fight between buyers and sellers. You guys watched it. Who do you suppose won that fight? I think it was all buyers. Were there context clues? Small or large triggers rolled from red to green. All the triggers above support, smalls above the large, right? You can see the change coming. You may not have a rule met yet. There's one of those tails after the breakout. Maybe not your best entry. Guys, is there anything else you'd like to talk about? We made it through 3 hours of chart reads today. That's pretty cool. I'm having fun with this. I hope you guys are. I do feel like a fish out of water a little bit. JR, is there more I can do for you on TradingView? That's the basics. Are you comfortable with the scrolling? Are you comfortable with getting in, getting out? So prime chart, cool. Or chart prime. Chart prime is what creates the zones. And John went through a lot of different zones, a lot of different software. Chart prime is the one that he liked the best. There were others, like there's a free one that is Algo, and I think I even have it saved over here. Dynamic supply and demand, and he said on a large chart, this is pretty good. No, you're good, Junior. But it lacks accuracy on a smaller time frame. So the chart prime is really, and I don't know what the monthly is, maybe 40. If you buy it for the year, it's not a huge investment, but the advantage is overwhelming, I think, that comes through it. Practice mechanics, practice getting in, practice getting out. 53 a month, right on. If you're using it properly, if you're following a plan, it's just a cost of doing business, right? It's like buying your storefront. My brother-in-law wants to start trading, and he's like, well, what's it going to cost me? I'm like, well, you gotta buy the tools. You gotta buy the tools. I said, plan on spending $100 a month on tools. And then if you get good at it, the tools pay for themselves. All right, let's see what you did here. 1050, 1050, 96. All right, so I can't see your large chart, Miss Kathy. You say high probability trend trade. Momentum, yes. Path, yes. Entry. Got out because I didn't realize I had 2 contracts not split like you taught me. Got out, changed it. That's okay. That's a $320 trade on the way up. So let's talk about, because you kind of hid your large chart from me. Whoops. So I'm going to show it on mine. So you said momentum, yes, Miss Kathy, and I'm going to say you're in a strong trending market, so I support your recognition of momentum 100%. Does that make sense? It's not separation, but it is a strong trending market. You have 30 plus bars in the same direction without a blink. So it's important that you understand that is a strong trending market. You do have a clear path. You read it perfect, analyzed it beautifully. What is the one challenge if we're looking at the smaller, faster chart? You have momentum, you have path, but you don't have any areas inside of triggers. Does that make sense? Is it going to be the fib? Is it going to be the mid band? Is it going to be this fib? Is it going to be that fib? Is it going to be one of these? I don't know. And the only reason I mention this is because I don't know. I don't have any idea. So let me go through my basic knowledge. If price reaches support and all my triggers are above, support is likely to stop the market. Does that sound familiar? If price retraces and hits Fibonacci support, support's likely to stop the market, right? What a great entry. The only challenge on this one, Kathy, is I'm going to ask you, and where did you put your stop? Because you can't define stop placement when you're already on the wrong side of the triggers. So you have to pick just a random number, right? So you're in at 84, and if you're willing to risk 5 ticks, you get stopped out. And if you're willing to risk 10 ticks, well, that puts you on the other side of the mid band. And if you risk 12 ticks, that seems excessive because you're way below where the market shouldn't go already. So I don't know if you were listening earlier when we were talking about the idea that when your large chart is perfect, beautiful, and you had it 100%, it's okay to force the market to go in the direction of your trade, because what that does for you is it gives you something to put your stop behind. Does that make sense? I love everything about your trade, but one of the things that identifies a successful trader is their ability to manage risk before they manage profits. So if you can't clearly define risk, you need something to help you get through that obstacle. The reversal bar does it. Now you could take it when it's an actual reversal bar. Some people say, this is what I anticipate to hold. I'll take it at the halfway point. I'll enter it and I'll use this stop. And some people will just jump in and really hope that that fib follows the pattern. I love your trade, and I want to be very, very clear on that. You did a great job and a great trade, but I want you addressing risk. Where does my risk go? How am I going to manage this trade if things don't work out the way it needs to? And that's still an amazing trade, even though you got out because you didn't have your stops in place. Nice job. All right. That's why you panicked. I did it this morning. I sent my brother the picture. I got into the perfect trend trade, Kathy. Let me see if I can find it. And mine was on TradingView. Man, I take a lot of pictures, don't I? I think that might have been it. So I take my perfect trend trade, all of my rules met, life is good. And I look up here and I'm like, holy smokes, I'm in 5 contracts, and I trade 2 contracts. It's just what I do. So I took 3 of them off. That's why that's on a 3. And I let the other 2 go to my target. But there's one of those trend trades. First, it's a termination, right? That's pretty good. Everything says up. I'm above the areas, and I just take the trend trade long to get back to the next sign of trouble. All right, Miss Claire, let me read your message here. Having trouble with HVA lines. You see them late. Do you have any tips on how to read the white bar that creates the line? You know I do. You know I do. So let's do this. Boy, that termination condition worked, didn't it? So let me open up and let's do, I don't know. I'm just going to blow up NASDAQ works. So let me make this really big. so that we can see it. And let me create some space between here. All right. And this is what we'll use. So Claire, this is birds and bees of creating HVA lines. Every HVA line comes from a breakout bar, and that's what the white bar is. So this down bar that's white is what we call a breakout bar. And it means that the seller said giddy up, and there's a lot of power in it. Claire, this line right here, this is the highest concentration of sellers in that bar at that specific price. That's the high volume area of the bar. Hey, Junior, take care. Man, all the questions you have, bring them to class. Let's cover everything. Let's make sure that you don't wonder about anything. And I'm excited about people coming in and talking about TradingView more. So help me launch that. That'll be great. So what happens, Claire, is first you get the breakout, and you can see where the high concentration is. The HVA line doesn't print until your breakout bar, so we'll call it the bob. The breakout bar must be confirmed with a down bar. When the down bar prints, the HVA line prints as well. So first it's a down bar, or first it's the breakout bar, then it's the down bar. When this bar closes, that's when the pink line shows up. Does that make sense? That's how they're born. Now let me show you something. This is a picture that says anticipates the HVA line, not a real trade. So Claire, when I get the zone reached on my large chart, and I get that breakout bar from the zone, and my fast triggers are going up, do you see how my entry is a tick or two above that highest volume area line? What I'm doing is I'm saying, I'm going to try to predict the formation of that line. And when the market goes up and snaps back to that high volume area before the confirmation bar is true, all I'm doing is I'm getting in where I hope that HVA line comes in. This is John Novak's white bar breakout trade. And as long as the fast triggers are up and strong, you're buying a pullback to those fast triggers. And this HVA line didn't print until the bar was all the way up here. And this is one of those instances, they were so ready to go up, I never got the HVA trade. But I can capitalize on that understanding, the high volume area, how it prints, what it needs, where it's going to happen, by buying that little snapback to the fast triggers. And I don't know, this particular instance, it was $1,000 to get up to the trouble there. So that's a great way to use those white bars. And it's just anticipating. You just had an aha moment? I love those. I love those. So here was your breakout bar. Once this bar printed, it created the HVA. Here was a breakout bar up. You never get a confirmation bar. No HVA. Here's a slew of breakout bars that never get confirmed. You never get the HVA. Same thing right there. Pretty neat, isn't it? Market flow is confusing at first. I don't know what the large chart's doing, but there's your breakout bar up. It looks like we've reached a zone. If there's an up bar, you'll get confirmation in a green line. If there's not an up bar, you'll never get it. So we do have the zone. The HVA rules say if we get an HVA line and the triggers roll, that'll be our buy. And Claire, we know exactly where the buy is going to come from if the rules are met. Right there from 21,930 and a quarter. We just don't have the rest of the rules met yet. And the fast triggers are heading the wrong direction. And now there's a breakout bar down. They're fighting. They're fighting. Good stuff today, guys. I had fun. I hope you had fun. I hope it gets easier every day. Confirmation is key. I'm not late. Wait. I think that's it. You're not late. Confirmation is what produces the bar. So let me show you. It's on a Renko chart, and I don't have it made. When this termination condition happens up here, see how fast it went down from that key area, Claire? A lot of times you don't get that HVA trade when they're really motivated to go. So if there was a breakout bar, that little blip right here, that might have been just a quick snapback to those fast triggers to be able to take advantage of it. So it's a way to kind of predict the HVA line coming, and if the conditions are right, find a way to capitalize. And then you know that if it comes back to the HVA line, you still have a trade because the rules are met, and you can keep your stops in place or add on or do whatever makes you happy. What else would you guys like to talk about? We don't have to end. It's Monday. I'm salary. Only 2 triggers through. I think that is going to be huge for you guys. How many triggers are through the area? If it's not perfect, can you use that a little bit? I hope so. I think so.